the price of money goes up, the price of people making money goes down if they make them far out of the future. And that's what these companies do when they have a high multiple.
Well, a little bit of it is just a reconciliation that, you know, perpetuation of earnings in a post-zero interest rate world does not last forever. You've been at the front, so you get your gold star now. You de-risk. You took 100% of equity down to 60, and you shave back on your growth and your defenses. So well done, you. But the question, yeah, it's okay. You know, plaudits from me are worth nothing. But what do you do next? As you go towards the end of the year, are you prepared to step in, that awful phrase, buy the dip, or how do you prepare to set up for 2024?
Yeah, so buy the dip is not really our style. We buy for the longer run. So what we do now is we look at in horror at all the people who talk about now things are uncertain, so you need to hold private credit and you need to run a lot of private credit risk and lock up your money for 5 or 7 years. No. We look at the high yield bonds and we think they're interesting, they're short duration. That's where we hold, and we might be buying more. We are, at the moment, the high yield market is not capitulating, and therefore we are not giving up on our equities. We're also, if they hold in the spreads, they have widened a bit, but if the credit side holds, if the central banks calm down, yields calm down, then in the next 3 months, it becomes also time to add to high yield and fixed income portfolios and to add to equities. If ECB...
I mean, Mads, if I can jump in here, because one of the arguments that Manus and I have frequently heard about private credit is that nothing is giving you diversification right now. Bonds and stocks are falling together. It's hard to find something that really is okay in this environment, maybe the dollar, and that private credit, whether warranted or not, because your money is locked up, you're not seeing that type of volatility. I know you don't agree with that. So if not credit, what gives you some diversification? Because high yield bonds, I mean, again, very correlated with equities.
Yeah, they are correlated. The only reason private credit doesn't correlate is that people don't update the value of the bonds. So the logic is we're facing potentially a recession. We're facing unprecedented risk. Let's go and give some of these managers who don't have the same typical experience as the high yield managers or the senior loan managers have. I would buy the senior loans or the high yield, yeah, but if you give it to younger managers or to private market companies and you say, so since there's no visibility, I'm going to give away the money for 3 years, 5 years, 7 years. Well, yes, if you buy private equity, but not if you buy private credit. Because what is most attractive right now is the 2-year. If you look at relative terms, the thing which is more attractive than the last 20 years is the US 2-year bond. Yeah, the US 2-year treasury is fantastic at the moment compared to the last 20 years.
There you go. That's what I should be doing with the dollars that I'm moving into the country. Right. We've got 1.5 minutes left. I want to know what a calm me down ECB looks like, and what does that shift the gears for you? Does the ECB set the tenor and the tone for you today? How hawkish will they be?
They will be a bit hawkish, and that's wrong. Yeah, they should be dovish. Europe is in recession. Their monetary policy works in a year to 2. The marginal utility of them having hiked to 4% compared to 3.5% is declining because you can't do much about the inflation, which is already in the system. So they should just not talk too much about hiking, or we are already in policy mistake territory. Yeah, it's enough. The more they do of hiking talk, the worse it is.
Okay, well, I'm certainly going to strap in my seatbelt then for today.
He's had enough of everybody, hasn't he? He's had a pop at those. He's had a pop at those bond managers. He's had a pop at the. He's had a pop at the sort of the equity people that buy the dip. You're on form today, Mads. I'll give you that.
Yeah, I'm basically hearing you say, Mads, I have enough friends.
Maybe I don't know if I have enough friends. I'm glad to be back on the program. Thank you very much.
Good to have you.
You're a friend to the program, Mads Peterson. Thank you so much. That's Peterson of Human Edge Investment. All right, let's get to some other top stories that are trending on the terminal this morning. Now, in banking news, Nomura is overhauling its China business after losses deepen. Sources say the firm's Shanghai-based joint venture is reassessing its strategy. The head of Nomura's China committee says it's great timing to review the business.
And we have a deal. United Auto Workers scores a tentative labour agreement with Ford to end the strike. In the deal, Ford agrees a record 25% hourly wage hike. Pressure now grows on GM and Stellantis as the two car makers are set to meet the UAW today. Danny.
And police in the state of Maine are pursuing a suspect in a mass shooting after a pair of incidents has left at least 16 people dead in the city of Lewiston. Police say they are seeking 40-year-old Robert Card as a person of interest.
Coming up on the show, we'll continue the conversation about the ECB. We'll get a preview with the Allianz chief economists, Ludovic Subran and Morgan Stanley. Finally, a changing of the guard. A new CEO will dive into the bank's choice for the top role right here on Bloomberg.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
right.
So it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
It's Bloomberg Brief. I'm Menace Cranny in New York, Danny Berger in London. The succession race for Morgan Stanley, it's over. Ted Pick has been announced as the new CEO to succeed James Gorman after 14 years at the top. Who better to put the context around it than Shonali Bassick? She's been tracking this story. Here we go. We know who it is. Is he a kingmaker? Is he a deal maker? Who is Mr. Pick?
He was the man that was known to really start to turn around that institutional securities business, make the tough decisions over the fixed income unit. And now you have a person who has made Morgan Stanley really the #1 at equities trading as well, stepping into the spot with Dan Simkowitz, who is the head of the asset manager, coming in now to run institutional securities, and Andy Saperstein really taking over asset and wealth, which Dan used to run. So you have the new guard over at Morgan Stanley. I've got to say, Ted Pick has been rumored to be the next CEO in training here. He's been groomed for the better part of a decade. And so if it wasn't him at this point, it would have been a large surprise, but it really did come down to the wire here, Manus, in one of the hottest succession races we've seen on Wall Street in a long time.
Shonali, what is he inheriting? And to be more specific, what are some of the highest hurdles that he's going to face?
Well, there are a few things. I had mentioned the equities trading, for example, here, and Goldman Sachs is really picking at that business here. It is intensely competitive, Danny, and we are looking at a moment here where Goldman has surpassed them in a couple of quarters. When we look at equities trading in particular, the M&A market has been a softer market, but Goldman and JP Morgan have been surpassing Morgan Stanley of late, and same goes for IPOs. And Morgan Stanley has been traditionally strong in capital markets around the world, but of course it's a very challenging economic environment. And by the way, that asset and wealth manager has been the ballast to those volatile trading numbers, and asset and wealth in particular, missed estimates in the most recent quarter. And so it's a challenging time to take over Morgan Stanley because wealth tends to decline in a tough market. Will it face those secular declines if the market were to turn?
Yeah, the rich just stopped spending a little bit. We've seen that on the champagne at Louis Vuitton. Side curve. Do you think Colin Callagher sort of is? Do you think he's sort of sitting back going, should have hung around? I could have been the top dog. But he didn't want to hang around. That was the issue.
Well, and remember, over at UBS, if you're the chair of UBS, it's kind of more powerful than the CEO in a lot of ways, isn't it? It's different in European.
It depends
banking.
It depends really how you craft the role.
Yeah, absolutely. And he's leading one of the largest mergers of all time. Watching him compete with his former shop is a serious moment to watch UBS.
It's spicy.
It's very spicy.
No, it is interesting because, I mean, as you've been saying, I mean, wealth management, bread and butter of Morgan Stanley, and it's something UBS wants to beef up in the U.S. too. Now, speaking of other European bank earnings, Sonali, I spoke with the Standard Chartered CFO, Andy Halford, earlier. Just take a listen to that.
One particular sector, the commercial real estate sector, has clearly been problematic, not just for us, but for everybody. We've taken some charges in that regard. But overall, the outlook, we still think, over the next 2 or 3 or 4 years, is still very strong in the China region.
And Sonali, Standard Chartered just getting slammed in today's session. I know the European banks, they're very different business models, exposure to China, et cetera. But what have been some of your takeaways from what we've seen so far?
Well, there's a few things. It's weaknesses over in Europe that are coming through the banking system as well as in China. And if you take a look at BNP, it's that miss on net interest income. And if you look at Standard Chartered, it's the charges that they're taking not only to real estate. If it was real estate alone, Danny, that's one thing. Remember, the big U.S. banks have also taken impairment charges tied to real estate in the United States. But when you look at the broader charges, you have a separate charge here tied to Standard Chartered that is separate from real estate alone, tied to the banking system, $700 million. And so that extra charge on top of the real estate charges and just general weaknesses in lending are something to keep watching on when the bottom will turn out.
Okay, Sonali, thank you. We look forward to your double dip interview today. Don't miss it. Stay tuned to Bloomberg. Sonali will sit down with the outgoing James Gorman and the incoming Ted Pick. That is live from Morgan Stanley headquarters a little bit later on, right here in New York. Don't miss it. It's appointment viewing at 10:30 a.m. Let's just show you what is going on with those European banks. £2 billion was wiped off Standard Chartered's value at the open of trade, down 18%. It closed back 8% at the moment. You look at Swedbank off 8.5%, and Paribas down 4% as bond trading slides in the French fixed income division at Paribas, right here on Bloomberg.
EU is one of the largest and wealthiest consumer markets in the world, and there are very few global companies that can afford not to trade in the EU. So as the price for accessing the European market, these companies need to obey European regulations. That's not surprising. But often these companies choose that they will extend the European standards across their global conduct and their global production because they want to avoid the cost of complying with multiple different regulatory regimes. So there are benefits to standardization, benefits to uniform production. So all the EU needs to do is to regulate the single market. And it's then the market forces and the business incentives of global companies that transform that EU rule.
UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
President Biden and Israeli Prime Minister Benjamin Netanyahu have discussed efforts to secure the release of hostages and boost aid deliveries to Gaza. Joining us now is Bloomberg's Paul Wallace. Paul, one of the messages from Biden has been very clear. That is, delay a ground invasion until Israel can successfully get the release of more hostages. Where are we on that, on the likelihood and potential timeline for a ground invasion?
Hi, Danny. Yes, those comments from President Biden were pretty interesting. While we and others had already reported that there was pressure on Israel to delay this ground incursion of Gaza, that's not what the U.S. was saying publicly until of course, Joe Biden spoke yesterday. So the hostages are a big concern, and as far as we can tell, that's the major concern for Israel's major allies. They want to see a bigger push to get those roughly 220 people released by Hamas and the other militant groups that are holding them. And I think, broadly speaking, Israel has accepted that. It's very much still saying that a ground offensive is going to come. It's not saying when, but I think it is happy to allow for space for hostage negotiations to continue and hopefully get as many people out of the Gaza Strip as possible.
Okay, Paul, we will leave it there. Obviously, the narrative has shifted from both Biden and from Macron warning about the risk of a full-scale invasion. Just briefly, the humanitarian situation on the ground, Paul. Just give us a very brief update.
The situation in Gaza does seem to worsen by day. The UN and other relief agencies that operate there are sending constant warnings about just how bad it is when they look at the fuel situation, the food situation, the water situation. Aid is still going into Gaza, but in very small quantities. It is trickling in, and the US and others, Egypt, are pushing for more to go in.
Paul, thank you very much. That is Paul Wallace. Now, coming up, we're going to return to the conversation of the ECB decision. Ludovic Sabran, chief economist at Allianz, joins Manis and me next on Bloomberg.
not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power in the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We couldn't be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
I think we're getting more, but
that's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Lines.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
that really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most.
This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with two more potentially to come.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority. Markets count down in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Welcome back to Bloomberg Brief. I'm Manus Craney in New York.
And I'm Danny Berger in London. Here's what you need to know. Stocks extend declines after the NASDAQ 100 posts its worst drop of the year, following disappointing earnings from Google. Treasury yields steady after poor demand for 5-year notes pushed them higher yesterday. Morgan Stanley appoints a new CEO. Ted Pick steps in to succeed James Gorman after a 14-year run at the firm. Don't miss our interview with Pick and Gorman at 10:30 a.m. Eastern Time. And the Israeli army makes a brief raid against Hamas in northern Gaza. President Biden and Prime Minister Netanyahu are said to delay a full ground invasion to secure hostage releases. That's the request from Biden. The latest number of hostages held in Gaza is at 224, according to the Israeli military. Now let's get you into your markets this morning, because it has been a tough 24 hours for markets, but that is starting to ease. We do have yields basically flat at the moment. Manus, that was not the case yesterday. We had a challenging auction, shall we say, for the 5-year yield. There wasn't tons of demand. It was weak, and so we had a 15, 16 basis point move higher on the 30-year yield. Again, we're more calm this morning. We've had a little bit more ease in yen. We are still above 150, but we've had a lot of volatility in this thing today. Again, those jitters of intervention risk are alive. They are present. We are still looking at a euro, which is much weaker today. We're on the eve, not the eve, we are hours away from an ECB decision. But Manus, given some of the calmness we are seeing in the cross-asset picture, it does feel like the tone is being set by tech, it's being set by earnings, which shareholders have not received too warmly.
And if you think of that tech story, Danny, the Magnificent Seven, it's almost like a massive boat that's taking on water from some big, big punches in the bow, from Alphabet down over 10%, Meta. Not so much their numbers, but about the outlook and being trapped really by the rhetoric or the guidance on the macro landscape. We are on correction watch in the NASDAQ. We just caught up with Mads Peterson there, who said, look, this is not a dramatic implosion. It's just a reappraisal of risk relative to where the bond yields are. But it is the Magnificent Seven that are taking on water and under pressure. So it's also chips under pressure as well. Banks, autos, all of these sectors are causing pressure. You had a gain still on the board for Europe at the start of business yesterday. That is gone. You're looking at the autos under pressure, Mercedes and Volvo. Volvo will come up at the bottom of your screen. They missed on their electric vehicle target, and to that end, the market, the worst performing stock in Europe at the open was Volvo. Then it came to the calamity of the banks within the United Kingdom. You had Standard Chartered really taking some pretty significant charges. It's not about the actual charges, a total of $886 million of a hit. The stock dropped by the most since 2012. It has recovered. It was down 18% at one juncture. So there is this broad-based lampooning of anybody who disappoints in any way on the guidance in earnings. As we go into the end of the year, you need a substantial reason to take on significant risk at this juncture. Danny.
Yeah, Manus, and I mean, the data has shown, even for companies that surprise the upside, it's not too well received. Speaking of not well receiving, can I just say I loved Mads this morning, making no friends. He was like, okay, the ECB, if they're hawkish, policy mistake, and also private credit. I don't want to give my money and lock it up with those young people out there.
Yeah, but you love private credit. That's all I got to say. You're all over this private credit thing. I'm much more of a bond sort of, meat-eating bond trader rather than a quiche-eating commodity trader and a private equity trader. Go on.
A quiche eating. I just want to be clear. I myself don't invest in private credit. I just enjoy interviewing the folks over there. So let me just make clear my journalistic integrity is intact. All right, Manus, let's talk more about the ECB. It's set to keep interest rates on hold for the first time in more than a year, following 10 back-to-back increases. Let's get out to Athens, where this decision is taking place. Bloomberg's Maria Tadeo is standing by. Maria, the market's expecting them to hold, so where could the fireworks potentially be?
Yes, Danny, and by the way, we're in Athens. There's a reason for this. As you know, every year the European Central Bank takes one meeting away from Frankfurt. They rotate among the members of the euro area, so that's why we're here in Athens. Now, in terms of the positioning going into this meeting, as you say, for the market is almost fully priced in. The European Central Bank will hold. That means, of course, they keep the rates unchanged, and that should put, in theory, an end to this very aggressive hiking cycle that we've seen from the European Central Bank. You've had 10 consecutive hikes, more than 450 basis points now of tighter policy. Of course, this is a decision that does not come in isolation. You also need to see some of the elements that we got this week. We talked about the PMIs. Again, an economy that cannot catch a breather. We had the lending survey. And of course, the geopolitics. This is a central bank that cannot escape the geopolitics. Already, the head of the ECB making comments about the situation between Israel and Hamas, some of the ramifications that it could have, especially in energy. And that is assuming that there isn't an escalation. Now, you put all of this together, as I said, for the market, there is now a very strong case, of course, that the ECB holds today. The question is, when they hold, if they do and nothing is official until she makes it official, is the tone that will accompany that decision.
It's interesting. Maria, good to see you. What is it that I always got to stand outside a wet, mizzling, dreary Frankfurt headquarters, and you get the glamour of Athens? There's something in that. Lagarde did speak yesterday, and it was quite interesting. She spoke on TV. She made some comments, in a blackout period, in a closed period. But if we look at the press conference, how finely balanced is the rhetoric for her today? She's really got a hard line to tread, hasn't she?
Yes, and Manus, that's an excellent question. And in fact, just to give you maybe some insight as to that TV interview yesterday that she gave with a Greek network, what I'm being told is that this was an interview that was pre-recorded. As you say, this is a blackout period, so the time was perhaps strange, but I'm being told that this was a broad interview that mostly focused on the Greek economy. She talked inflation in general and did not signal a policy stance going into this meeting. So she did not want to send a signal with those comments. Now, in terms of the press conference, yes, the tone matters. If they hold, will she say this is still a situation that they have to assess? Will she now be willing to say we are at peak, this is it, basically the end of it? Remember, for a long time, she's not willing to put a number on the peak rate. And that, of course, matters. There's another question on the balance sheet. Remember, there's a lot of perhaps speculation that the ECB may be willing to tweak the end of the PEP reinvestment. It lasts until the end of 2024. Are they willing to make changes? So that will matter too.
Can I just say, Manus, you lived like literally on a beach for many years. You get no sympathy from me for not going to Athens.
I just want sympathy from anybody that I can get it from. That's just that's the general strategy that I apply. But I know Maria's not long on sympathy for anybody.
Well, you know what, Manus, it is 5:30 there a.m., so you get my sympathy. Hey, Maria. Thank you very much for joining. We know you got to prep for this decision. Bloomberg's Maria Tadeo there. All right, let's bring in now our guest on this. It's Ludovic Sabram, the chief economist over at Allianz. Ludo, I don't know where you are in the world right now. Hopefully somewhere warm and beachy, unlike Manus and me. But tell me, okay, this decision in Athens, we're just catching up with Mads Peterson in the past hour, who says even hawkish language from them would be a policy mistake. Is he right?
Come on, we have the worst PMIs ever. We have this conflict in the Middle East. I think Matt is just, hardcore German by now. So he's into these very hawkish moves. I can understand where it comes from because everybody is worried that the ECB throws the baby with the bathwater a bit too early, given what the Fed could do. But look, 4% is huge. I think the recession in Germany and Poland are very worrying for the zone. We see pass-through in the housing market that are very concerning. We see the sell-off on Italian BTPs that is unheard of, and that is not going to get better with the fiscal credibility this government has chosen to exhibit. And then we see also this refinancing wall for companies in 24. So I think, it's enough. And tail tightening will do the job. So I guess the pause is warranted. My main concern now is what's going to happen on QT, on quantitative tightening, because I think what's happening on the Italian spread is worrying, and we need to make sure we have some dry powder should something happen. And the TPI, the transmission policy mechanism, may not be enough, but flexible, PEP may actually be the key. So let's hold to that, bullet as long as we can.
So let's just take, you've thrown a lot at us there, Ludovic. Of course, I'm battle scarred from BTP, Bund spreads, having lived through the debt crisis, Danny and I having reported on it. How significant is it? They have a heck of a debt load. They've boosted their fiscal target. The spread is what, 200 basis points, up 45 basis points from the low. How significant is that? Or, has something shifted? Are we going to have a different kind of fiscal crisis in 2024?
It's the risk. To be fair, I'm very concerned about the fiscal trajectory that the Italian government has chosen. I'm also a bit concerned about the fiscal trajectory my government, the French government, has chosen, where we see that, the ultimate goal is really to be below 5% deficit. That's a very weak goal, So yes, the risk is there, but there is so much fiscal discipline already happening. Real rates are positive or are coming into positive territory very soon. The debt servicing in most countries has doubled, if not tripled. So I would say, look, there is enough to be fiscally disciplined. Yes, there is a risk that things go a bit in the wrong direction, but having, more than a point or a point and a half of, shaven off from the ECB2 growth is the most this euro area can swallow, as we see the regional energy crisis not going anywhere, and we see a bit of suffocating on the consumption side, and the consumer is really, very affected by negative wealth effects. So I think more may not do as much good in tightening whatever the supply side can do, and it's happening. Disinflation is happening. So let's not do a policy mistake. Yeah.
All of this makes me think, Ludo. We talk all the time about what kind of landing it's going to look like, but what does it look like after we land? This doesn't look like a European economy that even once inflation is tamed, even when the ECB is done, that can get off the ground again.
I think here in Europe, everybody's eyes are on Trump coming back in the U.S. because if he does the playbook 17-19, then we're going to have a big, a boost of growth in the U.S. and then maybe a dry up of dollar liquidity elsewhere. And Europe will still be struggling. Remember, we have elections that are very important where, extreme parties could be on the rise. So, yes, there is a major risk of repeat of 2012. That's the background. The good news, I would say, is that we've done giant leaps over the past years on the back of crises. So I hope that we can continue to do some additional, calibration of what needs to be done, especially on closing this discussion of the fiscal rules, because now that's why there is, this stray, moves, because there is no binding of what we want to expect. I also hope we make some significant, moves on strategic autonomy and on what positioning we want to towards China. I also hope we make strategic moves on competitiveness, and whatever has happened on the energy market is important, but it's not enough, right? So you're right. The main problem with Europe is either we go back to the old playbook and then we're stuck because the others have moved on, or we try to have some form of additional layers of strategic autonomy and statecraft. Makes us a bit less vulnerable, but this is a political, move that's not easy.
Yeah, I unfortunately we have to wrap it up there. We're out of time. Let me just say you're full of surprises. I did not expect Trump to be the answer to a question about European growth. Interesting stuff. Ludovic Sobran there of Allianz. Thanks so much. This is Bloomberg.
Ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Today, I would say perhaps only second to AI right now, which is AI has got so much going on that folks are so excited about it. Climate tech is the hottest area to be in.
Sports and money. They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
From the pickleball courts of Arizona,
to the kabaddi tournaments in India,
to the cornhole boards at your local tailgate. This is what's next in sports.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Messer and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
To Bloomberg.
I'm so grateful and so humbled to have gotten a unanimous vote on the floor by all of my colleagues here. We went through a lot to get here, but we are ready to govern, and that will begin right away.
There's a word you don't hear often, unity. The new Speaker of the House, Mike Johnson. Let's get to Jonathan Tamari. He's our Bloomberg government reporter. So, how did he unite the House GOP after 3 weeks of conflict? It really is, it's a significant deliverance, isn't it?
It certainly is, and an unexpected one. He's a person who's not well known even to other members of Congress, senators. Don't really know a lot about the guy. You know, Chuck Schumer, the leader of the Senate, says he's never met him. So they're going to be working together very closely now. And I think he benefited in a lot of ways from being such a low-profile person. Unlike the previous nominees for Speaker in the Republican Party, he had not had built up any kind of personal baggage or enemies within the conference. So he was conservative enough. He's very conservative on policies, conservative enough to kind of please the right wing that set off this entire saga, but he's also kind of got this folksy manner that I think makes him acceptable to more moderate people, where he's not a combative, kind of in-your-face presence. And so basically nobody hated him. They all found him acceptable, and they all wanted this over with. He got total support after these 3 weeks to become the next speaker from Republicans.
Yeah, it's funny because I was talking to someone here in Europe about putting together European Bloomberg programming, basically saying, okay, you know, a European audience won't know who he is. And the retort back to me was, neither will an American audience know who he is. Who is he? What's his background? What are some of the key policy areas he's focused on?
Yeah, and there's a big race on because he's so unknown. There's a big race on to define him. He's an attorney. He's from Louisiana. He served very briefly in the state legislature in Louisiana. He's only in his 4th term in Congress, so pretty new still, especially to become speaker. He's very socially conservative. He's a very religious person, has had some very strong anti-abortion views, very strong views against same-sex marriage, against teaching of LGBTQ issues in schools. And so those are some of the primary things that he took, his primary policy areas that he might be known for. He was also a key figure in trying to overturn the 2020 election. He encouraged Republicans to sign on to a lawsuit trying to throw out the results in a number of key states that President Biden won. And then he kind of gave them a lot of the rationale that they used on January 6, 2021, when they objected to the election results on the House floor. And so those are some of the major things that he's been known for, and that Republicans or Democrats are trying to stick to him.
Hey, Jonathan, thank you so much for waking up early for us. I'd like to say this is the last time you'll have to do it, but you and I both know there's plenty more drama on its way. Jonathan Tamari of Bloomberg Government. All right, let's turn from big government to big tech. Earnings season continues. Meta dashing hopes of a long-term recovery. Amazon is on deck after the bell. Joining us now is Matt Bloxham of Bloomberg Intelligence, who's also been up early. We've been up early discussing this together for some time now, because it kind of feels like the story, the tone setter of the day. What kind of tone has tech earnings set?
Confusing, I think, is probably a good way. I mean, it's been a real kind of roller coaster ride the last couple of days, and I think Meta itself was a roller coaster. It was fascinating watching last night the print come through. Generally, the initial take seemed to be quite positive, and then you had that surprise comment in the earnings call that, you know, they were uncertain about the outlook for revenue in 2024, and suddenly the mood changed. And I think when you combine that with the amount of money they continue to spend on the metaverse project, billions of dollars a quarter, that combination of high spending without any obvious near-term return, and potentially their core advertising business, which would make all their money, potentially going to face tougher times in 2024, suddenly became a kind of a less palatable mix for investors.
Right.
Yeah, and it was that line from the CFO, very subject to volatility in the macro landscape, despite the top line number. I mean, we've got a lovely story out at the moment. $200 billion worth has been erased from big tech so far in this earnings season. That's Alphabet and Tesla. How does the picture for Meta, let's say, compare to the other firms that rely heavily on advertising? Because we don't seem to have spent a great deal of time talking about advertising. We seem to have spent a lot of time talking about the outlook and the projection, which is maybe more important.
Yeah, absolutely. And yeah, it's been an interesting contrast because Q3 definitely seen a lot more ad spending by big brands than perhaps people were expecting. But everybody knows that the slowdown is coming. You know, we've had WPP today to kind of warn on revenue. You know, I think budgets are expected to come down in Q4. And if the current geopolitical and economic uncertainty persists, that's going to extend into 2024. So it's the forward view that really matters. And I think people are bracing themselves for tougher times ahead for anybody that as exposed as Meta and Alphabet are in a big way to advertising spend.
Honestly, I can just picture in my head the C-suite at Amazon with their terminal pulled up, looking at what tech stocks have done every time after they've reported, and must be dreading today to some degree.
Yeah, well, I mean, obviously they've got quite a diversified revenue pool. Obviously, most of their profit comes from Amazon Web Services, so I think that's where the focus is going to be tomorrow. Consensus is looking for about 12% year-on-year growth, which would be steady on last quarter. They are the leader in cloud services, and I think they'll have a good message to give there in terms of the tailwind from AI. They have a fledgling advertising business. They're trying to challenge Google and Meta on that area.
And to be fair, Microsoft did well off the back of that kind of narrative too.
Yeah, exactly.
Yeah. Matt, I'm afraid we're going to have to leave it there. Matt Bloxham of Bloomberg Intelligence. This is Bloomberg.
Let's go inside the boardroom. Let's suppose you win a proxy fight and/or you just get invited onto the board. You go to your first board meeting, and you're the person who's saying you can fix this company, and all of the others on the board of directors are saying, well, we're doing pretty well. How do you get received when you start saying, here's what I wanted you to do?
Well, first of all, we don't bring that to the boardroom. Our time is spent with the CEO, the chairman, the CFO, and share our plans with them outside the boardroom. We try never to solve an issue in a boardroom. Okay, it's always best done the day before, the week before, outside that room. We wouldn't be there if they really were doing well. So it's really hard for them to straight face and tell us we're doing well. And we present them with the plan.
Our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television, your global business authority.
It's Bloomberg Brief with Danny Berger in London, Manish Cranny in New York. Let's take a look at what's ahead, get you set up for your trading day. And the big event will come at 8:15 a.m. Eastern Time. It's the ECB rate decision. That will be followed by President Lagarde's news conference at 8:45 a.m. Then we get a slew of economic data. It's another round of U.S. jobless claims. We have third quarter GDP and durable goods at 8:30 a.m. Then after the closing bell, Manis, we're going to get tech earnings. Amazon and Intel will both report their results. We're just talking to Matt Bloxham saying that Amazon, there is some reason maybe to be cherry around about the cloud business, but man, investors have just been so bruising this earnings season for tech.
Yeah, well, I mean, it was Microsoft that had the bid on the back of their cloud earnings relative to Alphabet and Google. I'm just looking at the total numbers. $200 billion have been wiped off some of these big tech names. Just looking at it, Alphabet dropped by $180 billion, Tesla down $72 billion after their earnings, and Meta, as you can see, up for a rough ride this morning, and that's to do with the macro outlook, isn't it, Danny?
It is. I mean, saying that, unfortunately, we are subject to macro volatility. And to that point, I mean, there's no one who can humble you like Mads Peterson from Human Edge. When we said to him, is this capitulation, not just in bonds, but in tech? He said, no, Manis, no, Danny, this is not capitulation in tech. This is a simple resetting. If rates are moving higher, these duration equities are going to be hard hit when you're looking at cash flow further out getting discounted. That's all this simply is.
Can I just say is that that's the fund manager who came on the show literally at the start of the summer and said, I've gone from 100% equities to 60%, and I've moved my growth from 50 to 30, and my defensive's down as well. So, you know, I mean, he is ahead of the game. The issue is this: we are technically moving towards corrections in the NASDAQ, and the S&P 500 down 8.5% from its 2023 high. So these are critical days for both those markets.
Yep, and the question is how goes tech goes the rest of this market? This is Bloomberg.
In billionaire Warren Buffett. The legendary investor turns 93 this August. His signature must-read letters to shareholders have been getting shorter and shorter. This year's letter contained few fresh ideas. But most investors in a Bloomberg survey say Buffett's steady Eddie approach of buying cheap, safe, high-quality companies will beat the market. They expect returns in his investment company, Berkshire Hathaway, to outperform the S&P 500 over the next 5 years, adding to an incredible run in which Berkshire shares have returned more than 3 million% in the almost 6 decades Buffett has led the firm. Investors are also willing to pay up for Berkshire, which owns everything from the railroad BNSF and car insurer Geico to See's Candies and Coca-Cola. About 1/5 quantify the Buffett premium at more than 10% of Berkshire's stock price. More than a quarter say it's somewhere between 5 to 10%. There is one problem for Berkshire Hathaway: its size. Thanks to a bunch of cash-generating insurance companies, Berkshire has at least $130 billion in cash that it can put to work. But it needs big acquisitions to move the needle. Buffett calls it hunting for elephants. And we know Buffett hates overpaying. So that means sitting tight, patiently waiting for the right moment to pounce on the right company, which might be a drag on performance for now, but as Buffett fans know, usually works out in the long run.
From New York City,
From London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
The dynamics in inflation, in supply and demand globally have shifted.
The Fed's going to be higher for longer, probably for a lot longer than people think.
We got to the higher rates. What's next? Which stocks are going to succeed? Which are going to waver through this new environment?
The upward movement in the 10-year note is reflecting a new fair value, which I don't think markets have fully discounted yet.
You have to wait for the dice to stop dropping, and the problem is that everybody's been trying to catch them.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio, on television. What you need to know, we need to fold the data check right into our discussion this morning. The markets, plural, are on the move. There's no other way to put it. Lisa, just one icon from the northern and Pacific Rim, the Japanese yen through 150 is historic.
And we'll get there in terms of what this means for policy, but I take your point. It's not just the yen. It's that bond yields are continuing to go up. You're still seeing softness, even in areas where you're seeing companies outperform. When do we reach a tipping point? We're not there yet, and that to me was the takeaway.
The smartest paragraph I saw today, he will join us later on Bloomberg Surveillance. Julian Emanuel working with Edward S. Hyman over at Evercore ISI, and it's real simple. He says the Fed can't be happy, and you see that with the unraveling of 2-10 spread, the real yield going out above 2.52%.
The market maybe is doing the work for them, but it is not easy, and it's not clear that it's actually doing the work that's needed, because what we're going to get today is a GDP figure that shows a reacceleration in growth that is not what the Fed wants to see. Yesterday, we saw a blowout number of new home sales. This is momentum that the Fed isn't necessarily counting on to help drive down inflation.
Bramo getting me up to speed because I'm drowning in the narratives. Greifeld knows all the narratives. Catherine Greifeld joining us this morning. Katie, I haven't even looked at this. Bramo brings it up because she's way ahead of me. GDP, first look, 4.5%. It's a slow economy. We're really struggling.
Really reaccelerating on the GDP front. Yeah. We also have initial jobless claims, which you talk about awkward for the Fed. That could just add to it. So,
I mean, there's the economic data, but the character of 4.5%, to me, it's two Americas. And they're affected by the data. I haven't even looked at the 30-year mortgage. I'll do that while you're talking, Lisa. But the answer here is we're moving.
Yeah, I mean, this is true.
The market has moved in the last 24 hours, and from what I can tell, nobody's talking about it.
Well, and the feeling is at this point, when do we stop? And this was the discussion yesterday. It feels like a falling knife because someone tries to step in and say, okay, I like duration here. I like tech stocks here, et cetera. You're looking at a scenario where the yield just keeps going up and stocks just keep feeling weakness.
Greifeld house shopping, 8.09%. Are you kidding me? Rounded up, 8.1%. How do you do housing?
No one is happy with that. Sellers aren't happy. Buyers aren't happy. You can't move.
I mean, and the Fed's not happy as well. There's no speakers today. Do we have an auction?
Actually, to be completely honest, there is a speaker, but it's not about Fed policy, so it doesn't count as Fed speak. I'm just going to put that aside. It's the quiet period.
Words will be spoken.
Words will be spoken, but they will be spoken quietly and not having to do with monetary policy.
What we need to do is get through the brief because we've got a wonderful guest to synthesize these markets for you with really more than years of experience in the zaniness right now. I'm just going to look at the data. Futures are ugly, negative 28. The VIX way over 20. Gets out to 21.42, and that's up a full stick. That gets my attention. 4.95 on the 10-year yield. Oil quiescent, $89 a barrel. And dollar, I don't have the time now to go into it. All you got to know is DXY, BBDXY. They blow through to new blended highs. And the yen, a historic statistic, a wow number when you were looking. It's strong yen through 100 to 99.98. Yen, 150.28. With a multi-market brief, Lisa Abramowitz.
Well, yeah, people are looking for intervention over there. We haven't even mentioned this. 8:15 a.m., we get the ECB rate decision. Followed by 8:45 a.m. press conference by Christine Lagarde. To me, I'm less interested in what they do with rates. The expectation is for them to be on hold at 4%. Much more interested in the balance sheet. This, to me, is the secret story underpinning some of the moves that we've seen in the bond market. All of the central banks around the world are not buyers, they are sellers, and this is a shift.
Two things going on here. Alberto Gallo to join us later as well. If I'm Lagarde, I'm looking at the thermometer of the system over there, and that's a difference in yield between Italy and Germany. And you can do this when AC Milan plays a soccer game that was suspect. You know, you can do this. I'm missing Farrow. I'm channeling AC
it's
Milan
great.
with him here. But the
relevant.
answer is Italy higher yield against Germany shows the tensions in Europe as well.
And the difficulty of the ECB to really address it. At 8:30 a.m. in the U.S., it's a story of strength. We get third quarter GDP, the first look at it. 4.5%, yes, but Bloomberg Economics expected to come out at 4.9%. We're also getting initial jobless claims. Treasury Secretary Janet Yellen should join our own Peggy Collins in D.C. from 1:30 to 2:15 p.m., so don't miss that. And today we haven't even talked about this. After the bell, we get Amazon and Intel earnings. Amazon may be giving us the cleanest read on how much they are capturing some of the cloud spend, whether this means that Google is paring away. What I find the most interesting is after year-to-date gains like this, up 44% for Amazon, people are looking for a reason to sell. And the NASDAQ had the worst day yesterday going back to February. Why? Maybe because people are just looking for opportunities to trim more than anything
Google, negative 10%. Katie Greifeld, Amazon, are they going to do a Google today?
We'll see. They'd like to do a Microsoft probably, but Alphabet, worst day since March 16th, 2020 yesterday. You think about how that feeds into sentiment.
It's not Alphabet. It's good. You've learned. Just keep talking. It's the way to go.
Katrina Dudley joins us right now. She calls it Google, not Alphabet. She's really with Mutual Shares, which goes back a zillion years, but she is with John Templeton's Franklin Templeton as well. How do you manage money right now?
You manage money as though things are what the data is telling you. And we keep talking about the fact that there's a recession coming, but every data point you've just given me is positive. GDP is in the 4s. I mean, for me, that is just a positive data point. The jobless claims continue to come out, and they're continuing to be positive and surprising you. So we're all focusing on the negatives. Companies are all cautious, and they're almost being told, don't be the optimist in the room. And as an investor, that's when you make money, is that when your opinion and what you're seeing is different than what consensus is.
So where do you make money right now? I mean, what's great about this, and of course the heritage of Franklin Templeton is the basic idea of you've got to choose. Recently, active management's been a challenge. But where is the opportunity given the correlated market I see this morning?
So I would look at our portfolio and say it's actually the most balanced portfolio in Mutual Global Discovery that I have seen since I've been managing it. And so we just have opportunities that exist across the markets. And the benefits from us of being a global manager is I can go shopping in any market. So I can go shopping in Japan and pick up really good quality franchises there. And so that's what we're looking at, is where there's dislocations in the market, and where you've got a U.S. stock that trades at a premium to a good European or a good Japanese company. And so they're the opportunities that we're finding as active managers. But for once in my career, we're not seeing all the opportunities crowded into one sector. We're actually seeing them really dispersed.
How much can you really bank on a corporate model at a time where you have unhinged bond yields and a real uncertainty about what's behind that, given the fact that there are central banks selling, given the fact that there are shifting buyer bases around the world?
It's interesting that, yes, we talk about the central bank selling, but actually the consumer is buying yield. It's the first time that they can look at their money market accounts, and they're making 5% on their money market accounts. They're able to go into the treasury markets and make real yields. So I think that that's where some of the money is going to come from. In terms of looking at those yields thing, you've got to think about it. What are the implications from a company by company basis? And actually, we've been talking for over 20, 30 years how low yields have kept all these uneconomic businesses in business. And so the rising bond yields potentially flushes out some of these companies. And what does that do for the remaining companies? It actually makes them better, and they can gain market share. So it's a good thing, some of these rising bond yields.
So let's get a little bit more specific. Yesterday, Meta came out. They had better than expected earnings. It was a good report. And then on the call, they said, we are very subject to volatility of the macro landscape. The revenue outlook is uncertain for 2024, and the shares tanked. People were looking for reasons to sell. Are you coming in and buying?
Everyone is looking for reasons to sell everything. If you look at the regional banks, a similar type of commentary happened. If there was any type of negative commentary on the fourth quarter NIM, the stocks all tanked as well. So you're exactly right. Everyone keeps looking for these negative data points. But if you stand back and if you were objective and didn't put labels on this, and I was to give you some of that data in terms of what we're seeing on the job market in particular, you would be bullish. I mean, people are employed. Companies are still struggling to find labor. So even though someone like a Meta, has gone through layoffs in the past, probably a little overstaffed and just taking that down to normal. And those comments, though, do put fear into the market that we don't think is supported by the real action of companies.
Well, let's talk about that fear, because the pushback there would be, okay, you have a still robust, a still hot labor market in particular, but you think about what that could mean for the Fed in that last leg to get inflation back to 2%, that they're going to have to tip the economy into a recession to do that. So how are you thinking about that risk and balancing against your portfolio?
I don't think that they need to tip their economy into recession in order for you to get the inflation number down. I think that the first thing we need to recognize is that inflation is really a backward-looking measure, and the Fed has forward-looking models as to where they think the market is going. And so I think that the comments that they're coming out and talking about higher for longer is really informative. They are also not talking about rate cuts, and we are not expecting rate cuts to come. So in terms of the narrative, the Fed is not looking to tip the market into a recession. I think that is the bad case outcome in this situation. I think that they're just trying to make sure the economy's got enough support to kind of get through this and to muddle along.
And Katrina, you said that you could go anywhere right now. You could go to Japan. Are you? Are you going international?
Yes. We have increased our weighting in Japan significantly. I think that if you are on the ground in Japan, the essence of what's happening is tangible. You've got the reforms coming out of the stock exchange. We're talking about really simple metrics like price to book, but it's also followed up by a lot of other things in terms of having those dialogues with shareholders that these Japanese companies haven't been doing for so many years, improving their returns on equity, improving their balance sheet structure, getting rid of those cross holdings, buying back stock in the market. So Japanese companies are actually doing what we like to see them, what we like to see a good company do, and I think that's what makes us really optimistic. The cheap valuations, low ROEs, and the really good mindset change.
Katrina Dudley, Bond University, Australia, one of the greatest lights in investment in Australia. I was stunned. I said, Katrina's here. She's not remote from Washington. And then I look at the list last night at the White House. Katrina Dudley was stood up by the president. Rick Springfield was stood up by the president. The damn Veronicas of Brisbane were stood up by the president. Were you stunned you didn't get an invite to the state dinner last night for the Australian royalty?
You know what? I have been here for 25 plus years, so my Australian accent may be strong, but I think, I align so much more with Americans and with my residency status now.
How close were the tensions in the South Pacific and the South China Sea? How close does Australia and the United States need to be?
Australia and the United States have a long history of partnership, and I do not think Australia is willing to back down from that. The two countries are just so alike in the way that they operate and the way that they see the benefit of capitalism and the way that they value entrepreneurial spirit, and I think that extends into...
With what Rick Springfield did on General Hospital, Justin Wolfers got an invite. He and Betsy were there, but Rick Springfield was stood up for the Australian state dinner?
I was crushed. I was sitting there tracking it all.
He was going to go with Jesse.
We'll leave it at that. Did you have a...
No one has a clue what I'm talking about.
Fashion reviews. I was expecting the Tom Keane fashion reviews.
No, I'd let the Veronicas take care of the fashion review.
We'll have to buy you an Akuba for the next time you're on air.
At gunpoint, I was forced to read all of Neville Shute. Katrina Dudley of Australia, thank you so much with Franklin Mutual series today. The state dinners are amazing. You look at the guest list. Thanks to CNN for lining them all up. It's so damn political.
Oh, it's so political. I was actually looking at the list. I do want to bring this to you just quickly, not to shift gears too much, but UPS shares came out. And I do want to talk about this a little bit more later on because they're falling toward a 3-year low after revising lower their outlook.
So glad you brought
Talking about package delivery numbers coming down. This is a bellwether type of stock for the average consumer.
I can't say enough how much I agree with you on FDX and UPS. This is really tangible about the American economy, really coast to coast as well. On the markets, in the 7 o'clock hour, as I mentioned earlier, he's focused on the Fed and these markets in turmoil. Julian Emanuel of Evercore ISI. Stay with us, Bloomberg Surveillance.
On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
lot's happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From businesses most influential and instrumental.
America's economy needs a diversity of institutions.
That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Will the ECB hike or pause this week?
There's a lot in flux at the moment. As far as Europe is concerned, we have a weak economy, but we are not in recession.
We should be prepared for anything.
We need to monitor. We need to remain data dependent.
We need to focus on stability, but it's very fragile in an already fragmented world.
Bloomberg Television and Radio brings you the breaking news and detailed analysis after ECB President Christine Lagarde's press conference. Coverage begins today on Bloomberg. Context changes everything.
I'm so grateful and so humbled to have gotten a unanimous vote on the floor by all of my colleagues here. We're going to dispense with all the usual ceremonies and celebrations that traditionally follow a new speakership because we have no time for either one. The American people's business is too urgent in this moment. The hour is late, the crisis is great. In America, we hear you.
America, we hear you. The gentleman from Louisiana there in the shock of Washington, D.C., getting through 1, 2, maybe 3, I've lost count, 4, to get to a House Speaker that will carry on the tradition, say, of Sam Rayburn and others. Of course, Mike Johnson, he is of Louisiana, constitutional lawyer. There's been an uproar in the last number of hours over some of his track record. Lisa, you look at the zeitgeist that's out there, and progressives, of course, as you'd expect, are bent out of shape. But what I find interesting is the middle ground seems to be bent out of shape.
Well, the middle ground feels pretty beaten up after this whole back and forth. And there's a question, did Matt Gaetz just win? Right, and they felt like some of the things were underhanded. But here's the question now. Mike Johnson has to really rule as a consensus builder. Can he herd cats more than put forward his particular point of view?
And Katie, the immediacy of the deficit, you see where the bond market is, folks. And I'm not, we don't have time right now to go into this, but I got a 495 10-year, I've back out to a 508 30-year bond. Let's be blunt. The bid walks away from bonds, and you wonder if it's about the debt and the deficit.
Well, listening to Mike Johnson speak yesterday, I mean, it was clear that he has priorities coming into this speaker chair. And he did talk about the need to form a bipartisan committee to address the debt. Of course, I have to imagine on his priority list that falls below Ukraine or aid to Israel and Ukraine. We'll see if Ukraine. He talked about border security as well. And of course, that looming potential shutdown.
Maybe in the rotundas where the senators and the new Speaker of the House meet. We'll have to see on that with direct experience on that. Is John Lieber. He's managing director of Eurasia Group's United States shop. Is Ian Bremmer, extremely busy looking at the Eastern Mediterranean. John, let's fold in both stories right now. Mike Johnson has to lead a fractious House over to the Senate, where you were with the senator from Kentucky. Great. We've got to pass some form of war funding for a set of wars, maybe a set of border debates as well. Can Speaker Johnson get it done?
He could get it done. I mean, if Speaker Johnson wanted to put the bill that's probably going to pass the Senate on the floor tomorrow, it would almost certainly, or when the bill passes the Senate, it would almost certainly pass the House. So it's not a question of if he could, it's a question of if he wants to. And Johnson is, he's a guy of the right. He's not a Freedom Caucus member, but he's aligned with a lot of their views. I kind of think of him as Jim Jordan without all the personal baggage that prevented Jordan from becoming the speaker. And a lot of conservatives in D.C. are happy this morning because they see Johnson as picking up the mantle of Jordan and moving with that. What that probably means is he's going to try to extend current government funding into next year, meaning that this November 17th shutdown threat is probably reduced today relative to what it was yesterday. And in next year, he's going to try to leverage another government shutdown to try to cut more government spending. For foreign policy on Ukraine, Israel, border wall, funding for Taiwan, defense, these issues are not popular on the right. And even though they have massive, overwhelming support, bipartisan support in the House and the Senate, I'm not convinced yet Johnson wants to put that on the table, and I could see him trying to leverage that stuff for spending cuts on the overall appropriation side, which is ultimately where I think this is probably going.
When you would talk about cuts, he actually has been vocal about cutting Social Security, about cutting actually Medicare and some of these other entitlement programs. How much can he actually get that ball going? I mean, do you expect that to be very much on the table?
No, not at all. There's no chance Congress is going to cut Social Security or Medicare. There's maybe 5 or 6 lawmakers that would actually vote for a plan like that. If it were for a plan to be meaningful, there's very few lawmakers who would actually support that, and it's just not on the table right now. What the fight's going to be over is over these 12 appropriations bills and the FY24 funding. Johnson's already laid out a plan to cut FY24 funding and then start the FY25 budget cycle in order to give Republicans, he argues, to give Republicans some momentum going into the 24 elections. And this is not about expanding spending, despite the fact that there's multiple potential global conflicts that are brewing right now that the U.S. couldn't get involved in. This is about cutting spending. And earlier, Tom, you mentioned the issues in the Treasury markets. I mean, I think that in some ways these Republicans are a little bit ahead of the curve, because they're here talking about cutting spending at a time the rest of Washington is talking about expanding spending for all these foreign policy priorities. But politically, they just are in a minority for now.
Well, but John, taking a step back, there are different ways to cut spending. And right now, there's a real question about the immediate threats to different U.S. troops around the world, not only in the Middle East, in Israel, but elsewhere in the Middle East. How concerned are you that the U.S. cannot come through on its obligations if it cannot get a financing bill passed through Congress, and that it looks less likely at this point?
I think ultimately they will pass Ukraine aid. I think ultimately they will pass Israel aid. Israel aid in particular is overwhelmingly popular in both parties, and Ukraine aid probably hitches a ride and travels along with that. That's in the plan in the Senate. That's where I think this probably ends up going. It's going to be a lot less than the $106 billion that President Biden asked for, however, because of this resistance in the House. And the other issue is the timing. Does this come, the first obvious inflection point where they can get this done is on November 17th with the government shutdown date. If Johnson decides, nope, he can't go there, it's not good for his conference to do that, he may delay this and leverage this out, as I mentioned earlier.
And John, I want to talk a little bit about Johnson himself, because even Steve Scalise yesterday was joking about people needing to Google Mike Johnson after he won the speakership, and that relative unknownness to the American people, potentially to some of his peers. When you think about the process of building consensus here, what shot does Mike Johnson have?
Yeah, I mean, this whole thing is a reminder of what an inside game this whole speaker's race has been. And there's been all this speculation and a couple of more famous members who have popped up. And then this really obscure guy gets through because he's kind of the last person standing at the bar, and he's acceptable enough to enough members who have been chastened by the multiple rounds of votes that have become a little embarrassing. And I think that's how Mike Johnson slid through. In the 90s, this is basically how Denny Hastert slipped through to become speaker when the former speaker was taken down in a scandal. And, so this is not the first time we've seen an obscure member rise to the forefront.
John, thank you for the brief, really timely. John Lieber of Eurasia Group there on Washington, and again, this with the markets moving. I'm going to do a complete data check here in a moment. Lisa, just a round robin here. Equities, bonds, currencies, commodities. What is your peak attention this morning?
Well, I'm looking actually at the yen, ironically enough, and I'm also looking at actually the incentive to sell in the tech space. To me, this is the most interesting thing because earnings have actually been pretty good. And the fact that Meta beat earnings and came out and said, we don't know what's going to happen. Well, no kidding. Who does? And all of a sudden, the shares just tank.
We're Bitcoin free today. What do you see in the market that has your attention besides BitDog?
I want to keep talking about tech because coming into this week, I mean, the hope was that you'd see these big tech companies come out and reset the narrative. Some did, but not enough to look. If you look at the price action, I mean, what you saw in Alphabet yesterday was just overwhelming. Maybe Amazon will be the savior here, but there's a lot resting on that company right now.
It's going to be interesting to see, to say the least. And of course, this goes into earnings. Bloomberg Technology will brief you this afternoon, then on to Romaine Bostick and what we see this afternoon. I want to look at the data now. Lisa's looking at 150.29 yen. This is a Japanese yen with weakness back to in the vicinity of 1986. The 10-year yield in Japan, I rarely use this word, is a moonshot to a higher yield. The Bloomberg Financial Conditions Index shows restriction right now, negative 0.23. Chairman Powell's got to make note of that. Dollar stronger across the complex. Lagarde considers a 105 euro, maybe on its way to 104. Sterling, Farrell can't get it. He's got an umbrella in his cocktail and he's getting killed. So he's paid in sterling. Did you know that? Yeah.
Every day he comes on.
Yeah, it's like 4-1 was where he was. Right now, sterling, we're looking at a 120. Do we break 129? Futures at negative 20. Dow futures at negative 80. The VIX up a stick. Tension in the market, 21.21. Bloomberg surveillance. Good morning.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
right.
So it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
Bloomberg surveillance, good morning. Catherine Greifeld in for Jonathan Farrow, an extensive sabbatical for Mr. Farrow. I spoke to him yesterday.
Yeah?
Yeah, it's great. Do you know on his cruise, you can look out the port window he has a cabin. I've never seen this that goes all the way through to the starboard side.
Is that so?
It's
So
very
he can
cool.
avoid seeing anyone on his way to the
And he said
gym.
it's a little disconcerting. He says, it's like it hasn't been rough seas, but he says that you can look out both windows is not constructive.
Yeah.
Is that like the penthouse of the ship? How
It's
does
not
that
the penthouse. It's like 2 levels below that, but he's like 16 decks up. He says the deck is no fun. He went out on the deck once and he said, it's just too much. Anyways, Farrell's scheduled to return Monday, maybe Tuesday as well. He'd want a data check right now. Let's do that. The VIX up a stick, 21.21. Some real tension there, moving from the 18-19 level over the last 48 hours. And you see this critically through the market. We've been trying to correlate this for you. Oil not playing $89 a barrel. You'd think it'd be 93, 94 now. No. But the dollar's stronger. And there's any number of ways to go here, Lisa. I mean, I'm going to take out dollar, euro, yen, 158.48. Tells me it's really not a euro yen story. It's a dollar yen story at the 150.27.
Right now, the macro stories are saying we haven't hit the tipping points in some of the trends that we have seen. What I'm looking at is for the micro trends, which is why I was really hinging on UPS. And I want to just take a look quickly at that. Revenue fell almost 13% to below expectations. The shares are lower by 2.5%. But Katie, the shares were already lower by 15% year to date. We're looking at a company that sees revenues declining from lower package numbers. This is going to be a real question. Is this macro or is this specific execution?
Yeah, that's the thing. And it feels like UPS can't catch a break. And you also remember, this is a labor story as well. Of course, they signed that new contract with the Teamsters. It's front-loaded in this first year. That's going to hit profit margins as well.
I looked at Meta's, Meta's something down at the bottom of the income statement. They're making 34 cents in the dollar. UPS is like a real business. They're making under 10 cents a dollar. They're modeling out 9 cents a dollar. Their profit is 1/3 or 1/4 of Facebook. I mean, it's a different world than the tech babble Katie Greifeld talks about every day.
Well said. Not about the tech babble, but in general, you are seeing that. That is fantastic. I will do tech babble too, but everything Katie says, is more than babble. All right, under surveillance. We'll talk more about UPS in a bit. Morgan Stanley selecting Ted Pick to succeed James Gorman as CEO for the bank. Pick, a 30-year veteran of the firm, is credited with turning around the bank's trading business after the 2008 financial crisis. And Gorman, he is stepping down after a 14-year run leading the bank, but he'll stay on as executive chair.
I just look at this and I go, what is in the oxygen up Route 7 in Vermont? Thomas Schode owns the high ground in small banking.
I knew you were going to.
Ted Pick, Middlebury grad, takes the trophy at Morgan Stanley. What is it about Middlebury other than they gave me 6 stitches in my elbow? I mean, I don't,
He's holding a grudge.
I don't get it. It's a grudge. Ted, it's a grudge, I say. What else do you have?
Well, hold on a second. Okay. Just quickly, I will say it's going to be interesting because there's a lot of tit for tat in Goldman Sachs, and this has been one person credited with giving Morgan Stanley the upper hand.
And we got to talk to Shanali about, there were other people in the Derby,
and they're staying on, which is somewhat unusual when you look at these big bank succession stories. But Andy Saperstein, Dan Simkowitz, they're all staying with Morgan Stanley, which is a testament to this process.
We are the world. They're all singing Kumbaya at Morgan Stanley today.
Bloomberg Shanali Bostic is going to be sitting down with Gorman and Pick at 10:30 a.m. Eastern. Do not miss this. They will sit and sing Kumbaya together. The UAW and Ford putting the finishing touches on a new labor deal that would end a strike that's gone on for nearly 6 weeks. Ford offering to restore cost of living allowances and pay increases over the near 5-year term of the contract. They are expected to reach or exceed the union's 30% target, according to reporting by Bloomberg. Why are you shaking your head?
I'm so glad you brought this up because, if you wake up at Chrysler today, you're like, okay, what do we do? I don't understand the first mover status for Dearborn. Yeah. I just don't get. Okay, what's the so what now for the other two companies?
Well, it was interesting looking at the UAW's top Ford negotiator. He says that the UAW told Ford workers to go back to work to put pressure on the other two. So we'll see when that materializes and maybe some deals.
Although you pointed out about UPS and some of these deals that the companies are coming to, how much does that shrink margins? And where are going to be some of the shrink points? We heard that a bit from GM earlier this week. Meanwhile, the ECB rate decision just under 2 hours away. Central bank set to keep rates on hold for the first time in over a year. There are growing signs their run of hikes is working to bring down inflation. Economists in our survey unanimous in predicting a hold. The team at Bloomberg Economics adding that the ECB will, quote, probably try to communicate that its main policy rates will remain on hold through the first half of next year.
It's a really good team in Europe that we've put together. Anna Wong and Tom Orlick has put that together as well. As I said, I think the other day, Lagarde at Marrakesh was adamant to get back to a 2% statement, but I just really wonder, with the tea leaves you and I see, it's like 12 noon when we see them there, and they still indicate inflation. I mean, there's just no other way to put it. There's none of this David Rosenberg disinflation chat going on.
Which is the reason why I wonder, yes, they might not raise rates further, Katie, but what you might end up seeing is a balance sheet kind of emphasis. And that's why I'm really focused on that, considering all of the pressure on who's buying the bonds.
Yeah, and we were talking about this yesterday, this divergence coming between some of the big central banks, the Fed's balance sheet versus the ECB. You consider the fact that they're still staying fully reinvesting those maturing securities through 2024. That is a long time.
Normally, with Jane Foley of Rabobank, we would talk about the hedging business across this world, the actual use of foreign exchange in business. Or on this day, we would talk about the European Central Bank. We do a surveillance, rip up the script with Ms. Foley today, head of FX strategy at Rabobank, and look at Japan. First principles, Jane, the yen is weakness back to 1986-ish. What does that mean for Japan and the people of Japan?
Well, oddly enough, it probably means something a little bit different this year than it meant last year, because last year you had commodities across the board really rising, and of course the yen was really emphasizing that. And of course, as we know, Japan doesn't have its own natural resources. These are all imported in. So that was a really significant problem, particularly for the medium and the smaller size businesses who couldn't export out, who weren't benefiting from the weakness of the yen in that direction. Now, this year, you still have, fairly elevated oil prices, but some of those commodity prices, have slipped. So potentially, the yen is meaning something different to some firms, but it is still a problem. You see this in some of the Tankan reports, etc. For small and businesses, medium-sized businesses, yen weakness is still an issue. So the question is, to what degree is this pressure going to come through onto the Bank of Japan? Do they see that the yen weakness now, enough for them to alter policy next week?
If we move away from the babble, the foreign exchange babble of Michael Rosenberg or the academics of Ken Rogoff and Maurice Obstfeld, move on to the hardcore truth. Japan needs to buy U.S. bills, notes, and bonds. How does a 150 yen change the appetite of Japan to buy our paper and keep the bid up?
Or, if we do see yields going higher in Japan, if we do have a tweak to yield curve control, we've seen speculation over the last week or so suggesting that the Bank of Japan may be prepared to allow that 10-year yield to rise. How does that alter the dynamic then for domestic Japanese investors, looking at U.S. Treasuries? Now, that clearly is a concern potentially for the U.S. Treasury at a time when they see potentially less buying from Chinese investors too, and at a time when, supply is going to be a constraint perhaps through November with the refunding. So, there's various different elements to this outlook, and, that is why I think next week's Bank of Japan meeting is going to be so important for lots of different reasons. Are they going to announce another tweak to yield curve control or not?
One of the interesting things about Japan is it's been so out of sync with the other global central banks that are actually reducing their balance sheets and aggressively moving in the opposite direction. I want to talk about the ECB and the announcement that we're going to get in about an hour and a half time. How much are you expecting them to talk about the balance sheet and how quickly that can continue unwinding at a time where people are talking about unmoored long end rates?
This is, I think, going to be really fascinating, not just today, but really going into 2024. And it raises, I think, particular questions, again, about Italy and Italy's debt. We saw a month or so ago that the right-wing government say that they can't meet the pledges that they did have for lowering the budget deficit this year and next year, that they want to give their voters the welfare payments that they voted for. Now, next year, we could run into some constraints, really, with Brussels and Italy. We're going to see some new revised targets, really, or ideals from Brussels as to where Eurozone budgets and deficits should be. And so this all comes into the environment, for the ECB and its programs. If we do run into issues between Italy and Brussels, to what extent will the ECB be willing to use its tools or not? Because the ECB could see. We've seen some reports of this over the last week, suggesting that sources are suggesting that if Italy's debt yields sort of come into trouble, well, that's because of the politics of the budget in Italy and not really the problem of the ECB. So I think all of these questions are going to be highly topical as we move further into 2024.
Well, Jane, when you think about that delicate dance that the ECB has to do, keeping an eye on all of these different nations, and you think about rate cut expectations being pushed out for the ECB to the second half and then some of next year, is that realistic?
Well, given that the ECB has a target just on inflation, well, that's probably what they're going to focus on first and foremost. So I think we have seen core inflation come down in the Eurozone. We've seen the PMIs earlier this week suggest that the labour market is loosening. They are positive signs, but all the same, inflation is above target. And therefore, I think one of the communication aims for today will certainly be to try and stop the market from pricing in interest rate cuts too soon. So we've got this sort of European higher for longer thing, I think, going on. If we do run into difficulties, say with Italian debt during the course of 2024, if Italy growth, does slow significantly, that's going to be potentially an issue for the central bank. But I think for now, the signalling is going to be about trying to control the inflation outlook, trying to promote this higher for longer, do not price in interest rate cuts too soon rhetoric from Lagarde.
And let's bring this conversation to the currency market, because, of course, that's where a lot of this drama is playing out. You look at Euro USD right now at 105 and change. I see your view is at 102 on a 3-month view. What gets us there?
Well, I think a large part of this is going to be the European story. We're forecasting that the Eurozone could be in recession right now in the second half of this year. We were concerned about the outlook for Germany. We're concerned about the impact of higher energy prices. What's that going to do for German industry over the long run? I mean, we've got to look at natural gas. It's still not back to, pre-Russian invasion of Ukraine sort of levels. This could have a longer-term impact. We've got labour market issues in Germany too. That could alter the outlook for industry. So significant concerns, I think, about the outlook for European growth over the medium term. And I think that is going to be an important part of the equation.
Our heroes, Jane, Robert Mundell, Rudiger Dornbusch, and others would tell you sequential interventions become ever weaker and weaker. Do you just assume action by BOJ or MOF is a weaker effort this time?
Well, they certainly haven't done an awful lot of intervention. I think they understand the view that as soon as they show their hand, or as soon as they use, some of that ammunition, then it does weaken. So if they can get, as much value for their buck just by verbal intervention, that's what they're going to try and do. And that's what they've really tried to do, I think, this year. However, if we do not see a tweaked to yield curve control next week, if we see the Bank of Japan maintaining those very, very accommodative monetary policy settings, I think there are going to be lots of bets and lots of speculators pushing dollar-yen above that 150 level.
Jane, thank you for the brief, particularly there on dollar-yen. Jane Foley is with Rabobank. You see how military they are? The foreign exchange people are ruthless. Everything's about ammunition, and yesterday it was powder dry. I mean, there's Jane Foley from Britain. She's going back to Cromwell, 1642. Japan's keeping their powder dry, is what she meant to say.
Well, I think that you could make a lot of analogies. I would just say right now, trying to get your handle around the macro picture, not easy.
Breathtaking.
And then
can you imagine making a bet right now?
No, I really can't. I asked one guest after the show. I'm not going to say who. How hard is it? He was like, I'm just keeping my head down.
Greifeld's portfolio, straight up, BitDog, 34,300. It's the only reason she's with us this morning. Stay with us. A beautiful autumnal Thursday. This is Bloomberg.
The EU is one of the largest and wealthiest consumer markets in the world, and there are very few global companies that can afford not to trade in the EU. So as the price for accessing the European market, these companies need to obey European regulations. That's not surprising. But often these companies choose that they will extend the European standards across their global conduct and their global production because they want to avoid the cost of complying with multiple different regulatory regimes. So there are benefits to standardization, benefits to uniform production. So all the EU needs to do is to regulate the single market. And it's then the market forces and the business incentives of global companies that transform that EU rule.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
We've seen long signals in big tech, mega cap, and we're seeing short signals in the small cap. That tells the consumer the average stock is in trouble. Your big, high names, they're doing well, but your average stock is worried about higher rates.
Katie Kaminsky of Alpha Simplex, Andrew Loshop, list lights out yesterday on trend-based, and her trend is higher for longer. She's looking for these yields to sustain, and I believe, Lisa, she sort of indicated, and for yields to move higher. That's what we're seeing today in the last 48 hours off of the many different narratives, the Eastern Mediterranean, what we see in Washington with Speaker Johnson. The markets, they speak, and with a vengeance, they speak strong dollar today with some real major currency weakness. Actually, rarely, but today the major currencies are weaker against dollar than EM currencies.
And this comes as we expect to get a GDP print for the third quarter that is expected to be 4.5%. The whisper number is substantially higher, which is definitely getting people's feeling that maybe the U.S. is continuing to diverge. Meta shares not diverging from the rest of the complex. Shares falling after the company warned of a, quote, uncertain revenue outlook for next year. Yeah. This was the dominant narrative, even though the tech giant beat expectations on third quarter revenue. All of this dashing hopes for a long-term recovery in the company's advertising business. It's spending, though, aggressively in other areas, in artificial intelligence and virtual reality. It raises this question, what are people hinging on to? Just this hope of uncertainty or expectation of uncertainty that we all know?
Just Instagram. It's just Instagram. It's what Strymon's doing over at Instagram.
Real. Plastics. Plastics. Mandeep Singh, Senior Technology Analyst.
I sit there on Instagram and go, that's a short.
Bloomberg Intelligence joining us now. Mandeep, what does it tell you that they came out with really good earnings, at least on the fundamental basis, that they say that there's uncertainty and that the shares sell off?
Well, so I think they gave a pretty broad guidance, 13 to 24% for next quarter. When you see that sort of wide guidance, the company is not sure. And they didn't have that sort of uncertain guidance on the expense side. So they said Reality Labs losses would mount. And I think where the company is really failing the investors is not giving them markers around what they are actually doing. I mean, losing $15 billion a year on Reality Labs and not telling what you are investing in. Because we know Apple has a new virtual reality headset. It didn't take them $15 billion to make that headset. So clearly they are investing in something that nobody knows. And I think that's the uncertainty.
How is AI different for Zuckerberg than AI is different for Google, where AI is different for Microsoft?
So there is an overlap between Google and Meta's version of AI versus Microsoft's. And
Microsoft's corporate, I got to get a job done, let's go.
Yeah.
What's Meta's AI?
Meta's AI is you're consuming Instagram feeds, Facebook feeds. The average user is. And so how can AI enhance that experience both for the consumer as well as for the creator who's creating content for the feed? And AI can offer you a lot of tools to generate images based on text description. So there's a lot that AI can do in messaging.
you're not selling
Think of customer service, WhatsApp.
AI and Instagram, I don't buy it. AI and Amazon this afternoon. What is Josie going to spin on AI at Amazon?
I mean, Amazon's story
cardboard box
is about compute, training the models. Everyone wants these GPUs to train their large language models.
Yeah, but they're buying AI from Microsoft. I saw that 10 days ago or so, right?
Yeah, well, they are upgrading their 365 on-prem version to Microsoft.
I'm completely lost.
And so that's the thing about the generative AI wave, that it is quite broad, and every company can use it in different ways. Some companies are focusing on training models, some are focused on inferencing use cases, and
you don't even know what this is, Katie. It feels like a Mork and Mindy skit where, Robin Williams is going, no, 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 no. Everybody's got a different definition of AI.
Or I guess they're trying to play for a different part of this large pie that everyone sees with generative AI.
Save me.
Well, let's talk about something we all know. Let's talk about the cloud business at Amazon. Of course, AWS, you saw sales growth there slow to a record low in the second quarter. We know that the cloud business was why Alphabet had such a bad day yesterday. What are we going to see out of the cloud business at Amazon?
I mean, the good thing is expectations are lower for Amazon, and we're talking about mid-teens growth for AWS. And yes, it has the largest base in cloud, but everyone perceives them to be behind with generative AI workloads. That may not be the case. And so there is room for an upside as long as they prove to the street that, they are catching up with Gen AI and offering the compute that everyone needs to train their models.
And not to go back in time, but you think about what happened at Alphabet. I mean, I'm just stuck on the share price move yesterday, down almost 10%, worst day since March 2020. Is that an overreaction? Was it that bad?
With Alphabet, it definitely felt like an overreaction simply because the search business actually did remarkably well. And unlike Meta, which continues to see ad pricing decline, Alphabet saw an ad pricing increase, which is a positive sign. It's an auction mechanism, so advertisers are bidding up for your ads. And there was talk about uncertainty yesterday around the Middle East war and everything that will draw down the advertiser spending. But clearly, Alphabet had a positive print on the search side, and the cloud side, really, the expectations were too high. So I think that's where Amazon may have an advantage going into the print.
I want to try to understand the psychology of the investor base in some of these tech names, because it's been shifting over time, and we've seen that. What are we learning about what the key triggers are going to be to buy and what the key triggers are going to be to sell after the gains that we've seen so far this year?
I mean, look, the cost of capital is going up. And so I think the days of spending $15 billion a year on moonshots are probably gone, even for larger companies. As long as they keep delivering, 20% plus growth for Meta, everyone is okay with them spending on Reality Labs. The moment that growth decelerates, that's when that $15 billion loss really becomes a sticking point for free cash flow.
Is that the reason why you expect things for Amazon to be positive? Because they have that infrastructure, AWS, which is the major player in the cloud space. They have that revenue coming in. They have Tom Keen's offspring buying lots of boxes. How much is that really going to play into a positive that could offset some of the negativity that we're hearing from the likes of UPS this morning?
Clearly, I think everyone believes that, digital transformation, generative AI, these are secular trends. And right now, I think for Meta to spend $30 billion in CapEx and not have a cloud business or something equivalent is also sticking out, because that could have been a key source of diversification for them.
This is an arch question. Do you and Anurag Rana see the cloud business? I have no idea what I'm saying. When you see the cloud business, is it a classic duopoly or triopoly, or can there be a set, number 5, 6, 7 players? I just don't buy it.
I mean, right now it's a triopoly, and Oracle actually is investing a lot in building its cloud business.
They're investing, but do you believe people can grab share and come down and make a fundamental free cash flow generation, or is it going to squeeze into a triopoly?
No, I think you can, because right now the nature of compute is changing. So it's not CPUs consumed on the cloud anymore. It's GPUs, different types of accelerators, different types of databases. And that's where, if you don't have a legacy business, which Microsoft does, I think Google has an advantage, Amazon has an advantage that they don't have a legacy business. And that's where they can keep building that.
Mandeep Singh, thank you so much. John Farrow just emailing in.
Yeah.
John Farrow, perfect day at Coco K, dovetailing nicely into what Royal Caribbean has just done. Jason Liberty and the team at Royal Caribbean just killing it. It's got a cruise ship pop here. People are out spending money on deck 16 of the Symphony of the Sea.
I just Googled Coco K, and I'm getting all these pictures of, slides and
Slides
things that,
and kids,
and kids and exactly things that I can picture John.
I don't know which sea they're in.
enjoying.
We keep it private. We don't want John's privacy.
You're
to be
keeping it so private. You're
invaded,
just
but,
really putting it under wraps.
Pharaoh, he's perfect day at Coco K. I don't get it. I mean, Rich Truman in radio production, he lives for these things. He's on them like 3 times a year. Have you done it?
Never done it, but apparently a lot of people are, because cruises have been crushing it all year. I mean, you just looking at the stock market, Royal Caribbean is up 66% so far this year. That's before what we saw this morning.
And just what we saw this morning, Royal Caribbean are reporting better than expected earnings and boosting their adjusted earnings per share outlook. And the shares are up about 4.4% in pre-market trading. So, John, we want to reach out to you. Thank you for doing your part.
No, but it's great. At Coco K,
cruiser.
we installed 4 terminals at Coco K, just so you know.
That's a draw.
They have different parts of Coco K for different
the fake
parts
news you
of
need to know.
society.
Gotta get a camera crew there.
They've got like families.
Yeah.
You want to volunteer?
Then they have a
that?
they have a separate beach for bratty families, and
That's
then
the biggest beach.
they have a separate beach for people on vacation going, where's the 210s? That would be John. We hope Mr. Farrell's having a good time at Coco K. Julian Emmanuel coming up. This is Bloomberg Surveillance.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Today, I would say perhaps only second to AI right now, which is AI has got so much going on and folks are so excited about it. Climate tech is the hottest area to be in.
We've been so used to the fact that every time there's a problem, central banks come and ease. This has been the kind of playbook, throughout my career, before that, after I left. Now we're in a very different environment. Central banks actually have to create a recession, in essence, to get back to price stability. So it's a complete reversal of the modus operandi, in a sense, of central banks as they've known it for the last several decades. So that's why it's not so much that they're getting something wrong. They've now acknowledged that there is this trade-off, these costs to pay, but it's a completely different way of thinking about central banks, and it's a different role. Another way to put it is they have to be unpopular now in order to get inflation back down, where it used to be you could count on them each time to rescue you, to stabilize the system, to bring support. And that has shifted, and I think many people, even in the markets, have not quite understood in my mind how much we are now in a different regime compared to the last 4 decades, effectively.
So it's what, almost an easing bias in the markets? How would you describe it?
In the U.S., yes. And I think it's this idea, this almost pre-programmed idea, when there is a problem, i.e. potential recession, central banks will come and ease.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanivek bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. Our studios in New York and San Francisco. Our expert hosts of the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority.
The dynamics in inflation, in supply and demand globally have shifted.
The Fed's going to be higher for longer, probably for a lot longer than people think.
We got to the higher rates. What's next? Which stocks are going to succeed, which are going to waver through this new environment?
The upward movement in the 10-year note is reflecting a new fair value, which I don't think markets have fully discounted yet.
You have to wait for the dice to stop dropping, and the problem is that everybody's been trying to catch them.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. An incredibly busy Thursday. Markets on the move as we go to a look for a buoyant GDP economy. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Mr. Farrow on assignment. Catherine Greifeld is in for John Farrow here. A spirited conversation, many narratives. I'm sorry, everything's blown aside, including the ECB meeting. By resurgent yields, Lisa.
And that really is going to be the key question for the ECB. How much do they expect this to be doing the work for them? How much do they lean against the idea that this is going to be the last rate hike? They haven't, or that basically they're not going to raise rates further from here. And how much are they going to keep rolling off a balance sheet when people are wondering who is going to buy all this debt when governments are facing rates like this?
But to my price analysis, we all go to yield analysis, and there's a point where that doesn't work. Right now, it doesn't work. Price analysis is there. And the bid just slips away in the stock market, in the bond market. The bid slips away for the Japanese yen. It's a worldwide bid slipping away.
Which is the reason why I think the reaction to some of these tech earnings has been the most interesting aspect, because they've actually, yes, they're not all the same. It is a motley group of companies, but there have been companies that reported good earnings and then have gotten beaten up. Is there a message in that that's really highlighting just this feeling of concern underpinning everything?
I don't know what the message is, but the question for me becomes, where's your haven in this market? Because whether or not you agree with the logic, I mean, tech has been your safety trade. That's been your haven asset. You're not seeing that in tech. You're not seeing that in bonds. Maybe you're seeing it in the dollar, but it feels like slim pickings out there.
Well, slim pickings, but it's also the dynamics of the spread market. What's credit done in the last 48 hours? Is it mirroring the tensions that we see?
You have seen a bit of spread widening, which is something that people have continued to express, that you're starting to see a little bit more of yields up. However, recently there was a bit more of a bid. I'm looking right now, spreads coming in. Honestly, what you're seeing right now is a feeling that things are not cracking, but you are feeling nervousness. That, to me, is really the headline.
The guest is so important here at 7. We're going to do a truncated data check. Futures deteriorate, negative 25. It's now negative 32. The VIX out well over a stick, 21.50. In the yield space, 10-year, 4.96, 5.09, and a 30-year bond. I have spread widening, and I got to get the real 10-year yield up. We don't have that print yet. DXY is going to give me a 107 in an hour. Lisa?
What we're looking at today, 8:15 a.m., is that ECB rate decision, followed by an 8:45 a.m. press conference by Christine Lagarde. I don't envy her. This is going to be a difficult performance. Does she repeat what Jay Powell did, which is basically say, you know, we're not hiking rates. We're going to keep them at 4. But we may hike later, and we're going to keep rolling off our balance sheet. And this might be one of the biggest drivers of some of the uncertainty around who's going to pick up all this debt. 8:30 a.m., you talk about dollar strength. Well, get this. Third quarter GDP is reaccelerating. This, to me, is going to be also highlighting the dispersion of the U.S. economy with everyone else. The expectation is 4.5% GDP growth in the third quarter. Bloomberg Economics expected to be 4.9%. Janet Yellen will comment on all that. U.S. Treasury Secretary in conversation with our very own Peggy Collins at 1:30 p.m. New York time. But to me, this is underpinning everything. We just have such strength, and that keeps coming through.
I think the narratives are extraordinary. Honestly, my head's spinning. I mean, I really don't know what to do with it.
And if you want your head to keep spinning, after the bell, we get Amazon and Intel. And how much do we see a more kind of divergence through the behemoths? And does Amazon, to Katie's point earlier, and it's a good point, give some credence to the idea that Google is falling behind in the triopoly of the cloud computing?
We want to talk here about the stock market with Julian Emanuel, Chief Equity and Quantitative Strategist at Evercore ISI. But we first have to pay honor to his publication today in the Harvard Business Review, HBR, on AI. He's done this with a cohort of true techies. Emmanuel's not a true techie. What'd you learn in writing this article? You took basically Ed Hyman, Julian Emmanuel, economics and service sector analysis, and brought it into a bunch of technoids for Harvard Business Review. What did you say? Well, I really got this wrong about AI. This is what I learned.
No, so the bottom line with AI, again, and this is a lot of the fear, we understand that we are in a particular period where information, disinformation, and deepfakes has potential ramifications across the globe. But the bigger picture on generative AI is that it is not going to be a discrete job killer like everyone says, okay? What it's going to do is help companies connect with their clients, and the way that you connect with your clients is by using the technology to enhance what humans do.
John Luddite went to Harvard in, I think it was 1682, I can't remember. Don't give me your fancy tech, babble. People are going to get run over by AI. Who gets run over by AI according to your publication?
Well, if you look at it, it should be the higher income earners, the white collar people, the people in finance.
You're looking at me. Keep going.
I told you, you're safe. You do communications. Interpersonal relationships are not going to disappear.
Do I have interpersonal? Hold my hand, please. Oh, it's so personal.
Together. It's going to be
you're killing me. Lisa, save me. Would you talk the stock market with him and forget this AI babble?
This goes into the whole question around who's winning and who's losing and how we're going to plan that out. With respect to some of these earnings, Katrina Dudley of Franklin, Temple Mutual series earlier came on the show, and she said, if higher rates basically push out the losers of the business, and they basically give more dominance to the big players. Who's winning based on what we've seen from earnings so far?
Well, I mean, you saw it yesterday. The world's largest software company, there's undertones of, positivity in terms of what they're doing in generative AI. And then the world's largest search engine, the undertone is negative because their product seems to be falling behind the rest of, the behemoths in the space.
Is there a larger takeaway? And I understand there's quite a bit of dispersion, so it's difficult to come out with some sort of overarching tech thesis. But is there a takeaway that people are hesitant to keep piling into some of these tech names at valuations where they are at this moment? Is that a sort of accurate takeaway from the reaction to earnings so far?
The 5% yield and the geopolitical situation that we're confronting right now is compressing valuations. You will have stocks that do well in earnings. You will have stocks that do poorly in earnings. But at the index level, there is a hesitance. And to the conversation earlier, there is one safe haven. It's Tom's triple levered cash fund.
It's just great. But people think I'm doing a massive 2 and 20 payout on that. I got to pay for the leverage. I mean, I'm not getting the the net return people think I am.
You're going on levered because the cost of leverage is too high. And frankly, that's one of the issues we're seeing in our institutional investors.
Katie's taking notes on this. Katie, it's an ETF. You'll look for it.
I was about to say, I'm seriously surprised that a triple leverage cash ETF hasn't been launched yet, because there's an ETF for everything under the sun.
Gensler said no.
Continue. Maybe after today. But I want to talk about what this means for managers, because you write in your notes that it's still a stock picker's market. And someone told me yesterday, I have to admit, I can't remember who, that if you want to look for stock picking opportunities, look in the small cap space right now, because there's a lot of carnage there.
There is. If you look at the Russell 2000, we are on the cusp of breaking through the 2022 lows. And frankly, as negative as that sounds as a headline, to us, the likelihood is going to be that that's going to cause a little bit more consternation in the market, a little bit more volatility, a little bit more fear. It is still October after all. And the fact is that there has been no fear this entire cycle since the top in January of 2022. And the fear is what creates the buying opportunity. And what tends to happen is that the worst stocks going in, the small caps, will end up being the winners when we get to the other side.
And if I'm trying to take the temperature of stress in this market, should I be looking at small caps? Because like Lisa, I've been looking at credit spreads for the past few months. I haven't seen anything. But you look at small caps and it's a different story.
Yeah, and obviously small caps, the index weighting itself has been a headwind. Light on tech, heavy on the financials component. But again, you look at credit, you look at the VIX, and they are not stressed yet. We don't think this cycle will end until we can see a degree of stress there.
Okay, so where are we in the cycle then?
We think that this idea that, particularly with Ed Hyman's forecast for a slowdown coming next year, that we have a bit more downside. And to us, again, this idea of the Russell 2000 taking out the 2022 lows will put a bit more consternation in. And we think somewhere around the 200-week moving average in the S&P 500, currently at 3940, that would represent about 14.5% below the July top. That's where we think consternation becomes a buying opportunity.
So what are you doing right now? Are you also going into Tom's new ETF, the triple leverage all cash? You can find it at Tom K. Equity Index.
No, because again, this whole idea of dispersion amongst all assets, and whether it's credit or equities or whatever, is creating opportunities. We like energy for the obvious reasons. We like healthcare because healthcare doesn't care about geopolitics and it doesn't care about interest rates. And we like some of these AI-centric names, but hedged at the index
You got a clean
level.
shirt on today. Hyman didn't do you with his black marking pen that he uses. You and Ed Hyman are elbowing each other as he tries to get out his report. And there's one elephant in the room. The elephant is the banks. Do you guys perceive, just collegially, do you perceive true instability in the banking industry, or these glide past to some low?
Well, the question is we're having these discussions. You have stocks in the banking sector trading 6 or 7 times.
Reverse split. Hyman knows this tattooed to his brain. I got Citigroup. It's CitiDog. 3.86, $3.86 pre-reverse split.
Is the cycle going to end without more stress in the financial space? Probably not. However, we got an implicit guarantee in March by the Fed. We're probably going to need to hear
Ask
more.
Ed when you get some free time about Continental Illinois. He'll brief you on that. Julian Emanuel, thank you so much. Evercore ISI, and look for Mr. Emanuel's important essay in Harvard Business Review this week on AI. What's great about the article, Lisa, it's in English. Mandeep sends me articles and I don't understand a word of them.
This thing called cloud computing.
Yeah, well, it's
What is this?
Is it going to take our jobs? I think of a fossil like me, I guess I really don't care. To you two, it's like it's a germane discussion.
That's why when we hear that, communication is a good thing, I'm going to practice my interpersonal communication skills with my children at home to make sure that they try to clean up after
People
themselves.
skills. The robots can't take that, so that's what I'm
Hopefully,
brushing up.
I would actually encourage them to try. I would enjoy that.
Emmanuel driving the market lower. Futures deteriorate, -34. This is Standard & Poor's futures. Dow futures -176. You got a solid a move here, a 1% move as well, and the VIX 21.61. But the Standard & Poor's 500, it's down 0.8%.
And some of that's coming from some of the other names that we're seeing come out, like Southwest, for example, which I just wanted to point to quickly because we saw UPS come out, beat. We also see Southwest, miss and revise lower some of their expectations. Southwest also revising lower some of their expectations. The idea of how much they're actually charging, prices are going down.
And that, obviously, those earnings stories, they're just overwhelming what you're actually seeing in the bond market, which is actually some semblance of stability, dare I say it. 10-year yield's only up about 1 basis point. Again, after the moves we've seen, maybe it doesn't matter. But at least for once, the epicenter volatility isn't the bond.
I got a print now in the 10-year real yield, 2.53%. We had one worthy on the show saying 2.7% is sort of, back to Volcker, back to what was a normal time, we thought, when Bob Seger was on top of the charts.
The fact that we're talking about stability and it's 4.97% 10-year yields, buttressing up against 5%.
Manifesting.
Yeah, to me, it's just this is stability at new places.
Please stay with us through the day. We'll be doing more data checks. Market's really topsy-turvy right now. That yen out through 150. Speaking of stability, we'll go to Washington. Edward Mills joins us with Raymond James on your stable Washington. This is Bloomberg Surveillance in New York.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month. Lots happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From businesses most influential and instrumental.
America's economy needs a diversity of institutions. That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio. ECB hike or pause this week?
There's a lot in flux at the moment. As far as Europe is concerned, we have a weak economy, but we are not in recession.
We should be prepared for anything.
We need to monitor. We need to remain data dependent.
We need to focus on stability, but it's very fragile in an already fragmented world.
Bloomberg Television and Radio brings you the breaking news and detailed analysis after ECB President Christine Lagarde's press conference. Coverage begins today on Bloomberg. Context changes everything.
I want to say to the American people, on behalf of all of us here, we hear you. We know the challenges you're facing. We know that there's a lot going on in our country, domestically and abroad, and we are ready to get to work again to solve those problems, and we will.
Speaker Johnson, there of Louisiana, freshly minted. Mike Johnson with some real controversy. We've been looking at that and a number of conversations this morning. Look at the balance of power this afternoon. We're really digging deep on your new Speaker of the House. We welcome all of you. We really want to, and we have done, I've been more guilty of this, don't tell Lagarde, but I've really given short shrift to the ECB. We're going to do that right now with a brief. This is a brief for the market deteriorating, negative 36. Standard & Poor's, we're out 1.49, 1.50 points on the VIX, buttressed up against 22, 21.68. The dollar continues to grind to dollar strength off DXY, the major trading pair, 106.80. Oil doesn't play here, $89 a barrel on Brent crude. Sterling, do we get to 119? Euro, do we get to 104? We're not there. Yen, a 150, we're there. I mean, it's amazing. And Lisa, I mean, if John was here, he'd be hyperventilating about the ECB. And we got to catch up with Faro analysis here. The ECB, what a tough set of cards they have.
Yeah, how do they hike into weakness, and how do they not hike at a time when they're still seeing inflation? How do they craft a message that's Powell-esque in saying, well, we may not hike again, but we may hike, and just don't get complacent, because we are not.
I was scheduled with the Bundesbank's Nagel in Marrakesh, and all of a sudden there was an email, dear Tom, oops, no, we can't make that meeting. And you really wonder how she will convey today in the press conference the core petrified of inflation versus an exterior using inflation as a constructive trade tool.
One thing that people keep saying is that this is an ECB that was dramatically late, and they fell behind the ball, and they have been conditioned by that experience to remain hawkish for longer. And that really remains the feeling at the ECB that we expect to hear from Christine Lagarde today.
And to me, Katie, help me with this with all your great work in technology. I mean, I talk about eurosclerosis, and it was, a topic yesterday. It was a topic here. But very quickly here, they're just not technologically as impacted as we are in the midst of our tech earnings season.
And that's the structural difference between the European equity market and, of course, the U.S. stock market. We talk about all the doom and gloom on the U.S. side, but you still have the NASDAQ 100 up by more than 30% year to date. You just don't have that heft in the European company side.
Missed that rally. Let's move to politics and not talk about the NASDAQ here again, futures at negative 35. Edward Mills, hugely experienced. He is at Raymond James, but far more has legit committee and individual congresspeople skills in Washington, particularly working with Maloney of New York. Ed Mills, this new speaker, the uproar that I hear, and yet your research note says he can drive to the center. How does the gentleman from Louisiana move the Republicans to a doable center?
I think it's going to be a tough task. I think, Tom, the thing that I am most focused on with the new speaker is how quickly at the end it happened in D.C. Things appear impossible right up until the moment it's inevitable. So having a unified Republican caucus is not something we would have thought. But the big question in my mind is this is a speaker who has not been vetted. And as he is vetted, how does he come out of that vet? What type of narrative about his leadership? And I think what we're talking about is for him to keep that, for him to keep the seat, for him to be able to govern, you do need to find the middle, because what we've seen is that the fringe does not support many legislative packages, and that's paralysis.
Help me with the sequence here, horse before cart. Is November 17th in a government shutdown prior to the defense allocations? You mentioned the first task of Senate, House, Senate is, well, war funding, if you will. Is that going to be before November 17?
I think it's kind of a toss-up between the two. I think to start with the November 17th deadline, Tom, we're not going to have a government shutdown. It looks like we are going to punt government funding either into January or maybe as far as April. But in doing that, there will be the conversation about defense funding. The president has sent up to Congress a robust supplemental package. And what we're hearing is the Senate will want to have a strong bipartisan vote on that, trying to put pressure on the House, not differentiating aid for Ukraine from Israel or Taiwan.
So how do you understand, Ed, the fact that Mike Johnson has made a real important issue of his cutting the deficit, and yet there are all of these requests to finance some pretty big military expenditures? How much is that going to be a sticking point that makes it uncertain whether we get this aid across? We were speaking earlier with John Lieber of Eurasia, and he was saying we're going to get it passed. Are you as confident?
I am confident that we'll get something passed. I think that the big question is timing in the scale of this, Lisa. When you go back to some of the other pushes to become speaker, this was probably most out in the focus during the push for Jim Jordan. The only way some of the defense hawks within the Republican caucus were willing to support him, and the expectation is the only reason why they're willing to support Johnson, was that they needed to get a guarantee on a robust defense bill, extra defense funding, and a Defense Authorization Act before the end of the year. That group is far greater than the 4 needed to keep that speakership. So if he wants to keep that speakership, he's been against that defense aid in the past, and especially voted against Ukraine aid. But the geopolitical environment's very different now, and his political position is completely changed.
And Ed, to do all that, you made the point that Johnson really needs to find the middle here, but if he doesn't, I was speaking to Henrietta Treyz yesterday, and she made the point that the Senate is still functional. That's the saving grace, because at the end of the day, the House will do what the Senate tells it to. Do you agree with that logic?
Largely. I think when you see the Senate, if they pass something with 80, 90 votes, it's not a politically tenable position not to even have a vote on that in the House. And if you were to have a vote on something that passed with 80 or 90 of the 100 votes in the Senate, in the House, it's near guaranteed to have a majority go to the president's desk. And I do think Johnson has a little bit of leeway here where he doesn't have the baggage of some of the previous ones. So some of the first fights, which will be government funding and defense funding, he's not necessarily going to get blamed for the position that Republicans are in because he's new to the job.
You know, Ed Mills, I look at this. I was taking Anne-Marie Horton 302, which is advanced civics lessons inside the Beltway. And I guess every speaker has a lot of power. Is he going to blow up the leadership of the Republican Party, or is he going to attach himself to, say, the hockey player from Minnesota and the others?
Well, I think he's going to attach himself to the majority leader. I think I'd go back to the last time we had a speaker that no one really had heard of, which was Speaker Hastert. And you have the most empowered majority leader kind of in decades with Tom DeLay. When you saw him have the press conference and there was some boos by Virginia Fox, What I was watching is Steve Scalise, the majority leader from his state of Louisiana, was standing right behind him and told him exactly what he said. He said, next question, let's talk about policy. Then Mike Johnson said, next question. So he is lockstep with the current majority leader.
And that is the Ed Mills perspective that's so valuable. With Raymond James, Ed Mills, thank you so much for wisdom on Capitol Hill.
Can I just say this? Congressman Tom Massey, a Kentucky Republican, came out after this and said, nobody hates him. He was talking about Mike Johnson. That's his best asset.
That's what Farrell says about me.
There you go.
That nobody hates you.
You could be speaker.
Maybe not. Okay, futures negative 35. We got to get back to the data. The market's here, folks, into the jobs report in 1 hour, into these important ECB meetings are really sport. Lisa, I'm just looking at it unraveling, and frankly, bonds aren't helping me here. 10-year, 4.97%.
Yeah, stability, but in the wrong direction. And the day is young. I mean, it took not that much to suddenly get things unmoored. And
the yen, 150.34. Good morning, Pacific Rim. On the ECB, Alberto Gallo of Andromeda Capital will do that next. This is Bloomberg Surveillance.
Sports and money. They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
It was something that was very natural and an easy transition for me.
From the pickleball courts of Arizona,
to the kabaddi tournaments in India,
to the cornhole boards at your local tailgate. This is what's next in sports.
From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew, alongside Kaylee Lines, deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
Surveillance Worldwide. Thank you for joining on radio and television. John Farrell, Lisa Bramwitz, and Tom Keene. Farrell on assignment. Catherine Greifeld with us today, and market's really on the move. We'll do more data checks for you, but we're not going to do them right now because, you know, Bassick showed up with her entourage, and she's like, can we rush through this and get to me? Negative 34 on the SPX. We're out. VIX widens out, 21.61. That's all the data you get right now on 1 hour to claims is, well, a quick under surveillance.
Yeah, we'll give you a little bit more data and under surveillance with respect to Meta sliding in pre-market, trading despite a beat on third quarter revenue. This comes after comments on the economic outlook and uncertainty. That this is really what's driving shares. Meta contributing to the losses, what we've seen in the NASDAQ yesterday. Amazon set to report after the closing bell. I think this is going to be interesting. The response, Katie, just quickly here, to me, is going to be the most interesting thing with Amazon.
Yeah, the stakes are super high for Amazon right now after what we've seen so far this week. From the market perspective, of course, as Mandeep Singh was telling us a little bit earlier, maybe expectations lower when it comes to the cloud business.
Yeah, and this is what certainly has been driving the response. Over in Detroit, Ford and the UAW coming to a tentative agreement to end the 6-week-long strike. Ford agreeing to a 25% boost in wages with added cost of living allowances. Details on benefits and unionization at EV battery plants remain to be seen. The deal still needs to be ratified among 57,000 employees who will get back to work in the meantime. But really, all eyes on GM and Stellantis. They're going to meet with negotiators, but don't they basically have to say, okay, we'll go along with it? Ford set the tone yet again.
Oh, I'll have to see. Is that it? I mean, is that what we got here on under surveillance?
No, there's another announcement.
Drum roll,
no,
go.
There's even more.
Finally.
But wait, I'll throw this one in too. Morgan Stanley's Ted Pick will become the bank's next CEO, taking over from James Gorman after his 14-year run. Pick, who is a current co-president, will take over in January. Gorman staying on as executive chairman. Bloomberg's very own Sonali Basak will be interviewing both of them today in about 3 hours' time. Sonali, what do you want to know?
What's fascinating here is that, yes, the seamless transition is happening. Ted Pick was rumored for a CEO spot for the better part of a decade. Can you imagine? And now you have Andy Saperstein and Dan Simkowitz who are in consideration for this top spot. They are staying on. What is he going to do to keep them around? And on top of that, you have Andy Saperstein, who's been really running that wealth management business, also now taking on asset management business. How do you keep him happy? How do you make sure that you're going to inspire him to keep that ship running, particularly if the economy gets tough?
But the ballet here is everything's fine, and you're going to get kumbaya this morning with Mr. Pick. I get that. The fact is everyone will pounce. Which kind of institution would these two worthies go to?
Listen, Pick inherited a blessing here. When James Gorman had taken over Morgan Stanley, it was barely a $40 billion firm, give or take. Goldman Sachs was more than double the market cap. Now Morgan Stanley is worth about $20 billion more, depending on what day you're on. But, you know, Pick is now entering a time where if markets get tumultuous, can he keep up the trading? Can he keep up the wealth management numbers? The most recent quarter, they missed.
Yeah, but where do these two guys go? Don't give me this kumbaya, we're all in it, we're going to get stock options and stick around. I just don't buy it for
It's never
minute.
kumbaya, is it, at the end of the day?
What kind of institutions would want to pick up these valuable talents?
And you think about it also, you have John Pruzan, who used to be the COO of the firm, was also a contender for a while. He's now running Pretium, looking to do deals to expand Pretium in terms of, expanding its asset management base. You have to wonder, Harvey Schwartz from Goldman to Carlyle, these private asset managers are picking off talent and they're picking them off hard.
I also want to talk about Morgan Stanley under Ted Pick, because as I understand it, it's not going to look too different. It sounds like we're not expecting anything huge in the way of strategy shifts. Really, this is a Morgan Stanley we know.
But one thing I wonder about, too, is you think about the big deals that Morgan Stanley has done. They've done the largest acquisition since the financial crisis. Goldman wasn't able to pull that off. They had to reverse the deals that they had done when they looked to diversifying. James Gorman had said they could do more deals, but if you have Ted Pick coming into the guard, is he willing to do more transformative M&A when he's still getting the seat warm? I think that the transition period for him and what he looks like as a leader, guys, this was a man that just 5 years ago was known as a bit of a bull in his china shop. A gleefully profane is how Bloomberg Sridhar Natarajan called him in a story pretty recently. But he's really become much more of a leader and much more poised. And watching him become a leader has been pretty fascinating over the last couple of years.
Yeah, much more of what we're seeing out of Casa Diamond. I am am curious, though, what took so long? Because this took a while after they announced it.
That was absolutely the scuttle in the market, right? Why? If we knew Ted was the one that was being groomed for so long, what took so long? Were there doubts, frankly, at the end of the day? There are things that are unresolved. For example, a block trading investigation. Equities performance has slipped a little under Ted Pick. And is asset management and wealth the future of Morgan Stanley?
Right.
These are the existential questions.
Sonali Basak with Mr. Pick. We'll look for that in the 10 o'clock hour this morning. Right now, on our first discussion, I'm sorry for this, folks, here at 7:35 New York time on the ECB, Alberto Gallo joins, Chief Investment Officer, co-founder of Andromeda Capital Management. Alberto, what is Lagarde's greatest challenge today in the press conference?
Good morning. The ECB has definitely made a policy error here. They were too late to hike. The plane lifted off too late, and now they're trying to keep the plane in the air, but the economy is running out of fuel. In Europe, we already see signs of lower earnings and a technical recession in Germany and Italy. And so keeping this 4% ECB rate is going to become a challenge. And on top of that, you have the hawkish members of the ECB that are now talking about balance sheet reduction. So the ECB has been very late in the game, and now it's trying to cling on the same stance as the Fed, perhaps to defend the euro. But the U.S. is a much stronger economy, and the ECB at some point is going to break something. That's the real challenge.
How much of Europe is in the vicinity of recession? We've had wide reporting on the German slowdown. Maybe it's due to China, maybe this, maybe that. But is the continent a general statement in a malaise?
No, we have, growth around zero. I would say this is more of a bump. It's not a heavy recession. But still, high rates don't help. Now, next year, going into next year, we have Euro Parliament elections. We have elections in the UK, but we don't have the same momentum that we had on the fiscal side that we had this year. So there's going to be, especially in the second half of next year, a curb into spending. There's no discussion of austerity. The U.S. continues to spend. The GDP is growing above 4%. So globally, we're still in a positive growth environment. But the ECB is stuck in this situation, trying to essentially copy the Fed, and the European banking system is solid, has given them, a good moment of strength after Credit Suisse. No European bank was in trouble, but it's the real economy that's not doing so well. And so, what breaks? You have BDP spreads above 200. You have countries that want to continue to spend, but very high interest rates. So some things are going to break. They have to choose between keeping the euro above parity or keeping BDP spreads where they are.
So how do you invest, right? I mean, how do you get confident about anything in Europe right now if you're waiting for things to break and you don't have confidence that the ECB or the economic momentum can save it on the other side?
So look, Lisa, what we're seeing today is that there's a few things that are bending. And our job is to choose the ones that are bending but are not going to break. So you've got companies that are bad, that don't have a sustainable business model, and they were used to funding at 2%. Now they're funding at 10%. We don't look at that. Then there's the good stuff that usually is sometimes it's expensive, it's tight, sometimes it's cheaper. And then there's the ugly, which are companies that have to sell assets. They're going to get in some cases, government help. A lot of European firms get government help. And so it's much better to look at, corporate debt or bank debt in this environment where governments don't want to have high unemployment, and they help firms like, Telecom Italia or, even Burger King in France, or the airlines, got help. So the margin of safety, very important value investor concept. We're always looking for things that have a margin of safety that can survive in a 10 to 15% default environment. So even in a large crisis, and that's starting to be cheap now. So we're happy to see that there is a bit of fear because we're getting paid for it.
How about in the European banking space? We've seen a bunch of earnings come out. The latest was Standard Chartered this morning, really highlighting how much the Chinese story is hurting some of its financials. How can you get confident in a banking system that, okay, maybe isn't breaking, but it doesn't really show signs of really thriving in this environment?
So look, big differentiation. We don't like the UK. The UK is in stagflation. There's, a declining property market, entrenched inflation. If you look at the Eurozone, we're focusing on commercial banks, investment banks have still a lot of, challenging business environment. And so we're looking at commercial banks and the large ones. And the large commercial banks in Europe are pretty much killing it. I mean, we're still in the phase where high interest rates help earnings. We're going to get into a phase where the economy does a bit worse and non-performing loans start rising. But let's remember that banks have gone through a lot of consolidation. Think about UniCredit results and how they want to, buy banks in Greece. Greece has gotten upgraded to investment grade. So there are areas of the market that are coming back from being high yield rated back to the investment grade part. And, if you look at earnings and dividends, banks are doing pretty well. Do I think it's an equity trade? No. Equities have done pretty well, and probably earnings going into next year would be a little bit weaker. But, solvency, you've got a pretty good buffer of returns and profitability before you start worrying about solvency. And so, and that's also true for corporates. They've termed out maturities, leverage is low. So default rates are going to rise, but they're going to rise to 4 or 5% from 2%. Right. We're not in a 10% default environment. There's a ton of money waiting in private debt and distressed funds, and they're not getting opportunities.
Well, to wait for another conversation, the ton of money that's out there. Alberto Gallo, thank you so much for the brief with Andromeda Capital. And this towards the ECB meeting. At 7:41 within the hour, we get jobless claims. Surveillance correction. I said jobs report. I was chastised by a listener.
It is a report on jobs, just
it is a claims.
Jobless.
Jobs
claims
report is once
report.
a month. Claims is weekly.
Report.
Did I nail that? It's a report.
Yeah, everything's reported.
Claims, 8:30. It's been a spectacular number. We'll see what that is. But far more importantly, GDP. The two of you, Katie, help me here. 4.5%. I guess. What's the whisper number?
It's higher, and that apparently is very scary. And we'll see. Again, we've been talking about this awkward position that the Fed is in. And of course, Alberto Gallo also brought up the fact that you look at U.S. spending. It's also the fiscal side that's working against the Fed here. A lot of resilience.
Honestly, I'm just looking at the fact that this is not necessarily what the Fed wants to see. Torsten Slot coming out earlier and said the most understated thing is what the Fed needs to do to actually get inflation under control.
And he mentioned super core inflation in the vicinity of 4%. Markets are in the move. We're going to do complete data checks for you through the morning. The Standard & Poor's 500 down 34 points. Down 0.8%.
When you talk about the whisper number, the Bloomberg economics number is 4.9% for U.S. GDP.
That's where Anna Wong is.
That's where Anna Wong is, and trying to get your head around the idea of a reacceleration heading into a period where, yes, we're worried about weakness, but we're not seeing it in the same kind of bulk. We're seeing it around the margins.
Did you see housing starts? I was deep into the surveillance nap yesterday, but housing starts, weren't they good? There was housing statistics yesterday that were like, really?
I mean, the housing market, I keep asking people about it. I keep getting the housing market is broken. And when it comes to the home builders, they're in a strange spot. I mean, they've been profiting all year. I mean, you look at the stock prices, they've just been shooting higher. But now it's getting a little bit trickier, and the data is just back and forth.
So new home sales came out yesterday at 10 a.m. That's what you're talking about, I think. And the expectation was for 680,000 new home sales. It came in at 759,000.
What do you do with that?
What you do with it is you know that it's broken. Yeah. Because what people are doing is they're not buying existing homes because nobody wants to sell them. And to buy them, you got to take out a mortgage. But a lot of these developers are offering mortgage rates that are a lot lower than that 8% to move inventory. So it's a sort of separate market unto itself to avoid entirely any kind of connection.
Could you see me as a realtor in the suburbs? Let's look at the
Can you imagine? I think you'd be great.
Let's look at the garage. It's a 3-car garage. Perfect for you.
We'll practice in the break.
8.09% mortgage. No problem. We can deal with that. Fascinating. My head's spinning. -32 on SPX. Michael Nathan said on the New York Yankees. We do that next. This is Bloomberg.
So let's go inside the boardroom. Let's suppose you win a proxy fight and or you just get invited onto the board. You go to your first board meeting, and you're the person who's saying you can fix this company, and all of the others on the board of directors are saying, well, we're doing pretty well. How do you get received when you start saying, here's what I wanted you to do?
Well, first of all, we don't bring that to the boardroom. Our time is spent with the CEO, the chairman, the CFO, and share our plans with them outside the boardroom. We try never to solve an issue in a boardroom. Okay, it's always best done the day before, the week before, outside that room. We wouldn't be there if they really were doing well. So it's really hard for them to straight face and tell us we're doing well. And we present it with a plan.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority. Markets count down in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great traders. How are you doing today? I'm going to place order to sell short British pound. The price I am looking to sell. Let me, I will check. The price will be 120.84.85. Okay. Order placed to sell short at the price 120.85. Just right here. Okay. If you're looking to trade with me, you need to place order and wait until we will get filled with this order, and then I will let you know what we're going to do next. Okay, order placed, and let's see if we will get filled in a couple of minutes or half an hour. I will not keep for longer this order, but we will see what's going to happen next. Okay, guys, I'll speak to you later.
Opening. You're not going to put it on camera. This guy's a buffoon. T-Mobile's going nowhere. What do the Germans know? Boom, they changed our world.
And they're trying to continue in that kind of vein. What was that, a hoodie?
I think so.
Or is that like sort of a jacket with big T on it, big pink
cool.
T?
They bought Harry Kane for Bayern, and you know, I mean, it's like the #1 corporate story I've been most wrong on in a million years.
And at this point, how do they sort of feature into, you never actually have to pay for your new iPhone because they will help finance, right? Is that sort of the game now in the mobile phone space?
They got a website to keep track of the number of AirPods under the couch. -31 on the SPX right now. We're down 0.8%. NASDAQ down a full 1%. That's important. The VIX 21.47. In the bonds space, you have a little bit of disinversion. I've got a 10-year real yield of 2.53%. That is jaw-dropping. And a 30-year mortgage, 8.09%. Joining us right now, John Farrow on assignment, Catherine Greifeld with us this morning. Michael Nathanson joins us. He's senior research analyst at MoffettNathanson on a plethora of things. Lisa, why don't you drag in Nathanson here on Facebook, because you know the story better than I do.
All right, Michael, thank you for joining us. I want to start with the one note of caution that really drove all of the price action. They came out and said, we don't know what's going to happen. What else is new? Advertising, who knows? Oh my goodness, the stock fell. How realistic is this, or instructive of what we can expect in the year to come?
Yeah, I was disappointed by that fact that the market took that comment and ran with it. These guys just put up 23% ad growth in a quarter. And a year ago, people were thinking this business was dead, right? All the momentum is behind them. They called out a little bit of choppiness because of what's happening in the Middle East. But I don't think it's that big of a deal. I mean, their guidance is still pretty strong. So I think this is an amazing story in terms of Tom and T-Mobile. This could be the second story that people have just underestimated the strength of a business model. the recovery's been amazing.
There's been a lot of questions though around just in general the online advertising business, especially at a time where all of the content creators are facing off with consumers that really don't like advertising and are willing to spend to avoid it. How much are we seeing with respect to consolidation of market share at the likes of Meta at a time when Google also saw an increase in ad spend despite their cloud issues? What does that tell us about the overall market versus just consolidation with the leaders?
Okay, big picture, those two companies, the growth rates of Meta and Alphabet are back to where they were in early 22. So if you remember the past couple of quarters, there's all kinds of worries about e-commerce slowing. It's getting better. About changes to Apple's IDFA system, that's been fixed. So it says to you like the market's actually really healthy and that you're seeing kind of the structural tailwinds of the e-commerce and online gaming discontinue, right? We had a very tough compare in 2022 that's now behind you. So I feel pretty good about the health of this business with the scale players. For a Snap, for a Twitter, good luck to you. That's not going to happen.
You know, Michael Nathanson, congratulations. Netflix has done a double. It's off. Mark Mahaney, what's he know? He's going up another $100 on Netflix. Review for us the winner of streaming. Is Netflix a Microsoft equivalent even at 38 times earnings?
Good question, Tom. It's different than Microsoft because you don't have the operating leverage, longer term, right? So you have to keep investing in content. The great thing about software models is the incremental margins are massive. Once you build it, you get the benefit of scale. In media, for the most part, in the streaming model, you have to keep investing in content. So they'll have margin leverage, but nowhere near the same margin leverage of what we saw last night with Meta or Microsoft. So, but in streaming, they're a winner just because it's such a tough business for everyone that's not Netflix right now. So it's really, there's one winner, there's Disney, and then there's everyone, and Disney's not even a winner yet. There's everyone just churning cash flow to get your attention.
Yeah, but, I just brought up the Disney chart. We do this for Michael Nathanson, folks, to give him a little bit of angst here on a Thursday morning.
Yes.
Michael Nathanson, Disney is back to 2014 pricing. Help.
Yep.
When does it turn? You've been wrong. It's been like the New York Yankees. It's a disaster, I say. When does Disney churn?
Can I just say upgraded when Bob Iger came back at $90, and it's just been painful for me. So thank you, Tom, for reminding me.
It's good. That's what we do.
It's got exactly, and sell houses in the suburbs. So here's what I think is going to happen. 2024 is a year of they have to consolidate Hulu and Disney Plus. Margins in streaming are negative. Netflix's are in the 20s. To me, it's about streaming profitability in 2024, and they have to get Hulu in-house, which is going to happen by hopefully the end of the year. So I haven't lost hope in Disney. I think that is. Again, I think this is your meta in 24. I mean, a year ago, people were killing this stock, and I think that Disney could be a great stock in 24, but you need to get streaming margins up to a level that people start caring about, which is going to take some time.
Well, Michael, it's really interesting to hear this conversation because you're still a buy on Disney. Okay, could be a great stock in 2024, but to meditate a little bit longer on your Netflix comments, you're still neutral on the stock.
Yeah.
What would bump you up to a buy?
What I'm to buy would be to have earnings numbers, because valuation, to Thomas' point, to me it's pretty full. Look at it versus Google, the Alphabet, or Meta. To me, it's having faith in numbers that are above consensus. And I think we all have the same numbers now. We pretty much have modeled what the company's told us. There's no way to doubt it at this point. So, pretty much we're just debating multiple at this point. I don't think people have a real edge on earnings, and our numbers are pretty much where consensus is. We're at Meta and other names. We've been above consensus, and that's been our call. We have conviction that numbers are wrong to the upside. We'll get very aggressive about the buy rating.
And when it comes to Netflix and the streaming business in general, how does Netflix maintain market share here? Does that really all just come back to the content slate?
Well, it's interesting. When they built their business, they borrowed other people's content, and we were writing for many years that was a dumb idea. So they would rent The Office, they would rent Friends. Given the state of media, you're starting to see evidence that they could go back to renting other people's content, which is a very cost-effective way to build a business. So what can happen longer term is that they could blend from making all these originals, which is a much tougher business, to renting people's movies and TV shows. And given, again, the state of media companies, that could happen. I don't think Disney will do that. but Warner's, Paramount, NBC, Universal have talked about licensing more content.
Michael, what are you expecting to hear after the bell when we get Amazon earnings, particularly around the acquisition of content having to do with sports, NFL, the last sort of death knell for cable?
Right. So Mike Morton covers it for Amazon for us. He's very bullish on next year's margin opportunity. They're going to be looking at the NBA, right? So the NFL has gone well for them. The ratings are up in a really strong amount this year. And the NBA is the next big package up for grabs. And there's a good chance that they can get a slate of games, getting a Tuesday or Thursday night games. So I think they're going to tell you that, look, it's going well. You see this as a chance, to your point, to really disintermediate cable networks. I think they're going to go for it. So, Amazon to us is really in the second or third position behind ESPN for getting the next set of big rights here for sports.
Award-winning Michael Nathanson with just decades of good news here, and on Disney, which will excel into 2024 with Moffat Nathanson, Michael Nathanson. There, he and I are going back and forth because he knows I know the game, and the number one value add, and I do this at lectures, when you lose money, really think about what you got wrong. That's far more important than going, I nailed Meta, a year ago, moonshot. It's like, okay, what did I get wrong about this? And once again, with Disney, I would opine that these are structural changes. I don't have his enthusiasm about streaming because everybody at home is watching YouTube.
Well, that's exactly
it's just
right.
Simple that.
Although it's an age thing too, because I will say that some people with young children might be using other
Yeah,
streaming
but how many young
networks.
children are there out there? I mean,
People are-
I get it, it's a segment,
Newsflash.
but Netflix is not looking at a segment, are they?
I don't know. Maybe they should be looking at TikTok because I don't know how
listen to you. Are you
long.
on TikTok?
Unfortunately, I am.
God, this is like, she's so hip.
It's the future. You gotta stay up.
Is Pharaoh on TikTok?
Absolutely not.
Yeah, I don't think I'm
He's not doing the dances. Well, TikTok, I don't know, versus Snap.
It's got some content.
Claims in 30 minutes. Lagarde next.
Venture capital. It's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Today, I would say perhaps only second to AI right now, which is AI has got so much going on that folks are so excited about it. Climate tech is the hottest area to be in.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1.
Right.
So it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
Hello traders again. As you can see, we sold short British pound against United States dollar. If you want to enter position, you still have time because it moved up a little bit. Don't invest 100% of your investment. If you don't know how much we invest tiny, because we trade on margin. We invest about 2%, 3% of total investment. So that's why if it will move higher, we will basically open another short position, and in this case we will reduce our loss on first position, and then when it will go higher, we will open position, and then we can hedge our first position against our second position. This way we will not lose any money, and basically we will end up in profit. If you want to find out more, you need to get the strategy. Otherwise, stay with me and we will close this trade hopefully today. If not, it still will be profitable to keep overnight because it's short position and broker pays us overnight charges. Okay, stay safe and I'll speak to you later.
He is back next week. Katie Greifeld sitting in, which is a beautiful thing. And Tom, we have almost forgotten ECB in all of the other news. And part of this is because they're not expected to do anything. They also have a very difficult problem on their hands.
They got a difficult problem on their hand, and it's different than the U.S. I'm going to call it Eurosclerosis, which is maybe not fun, but I got too many people agreeing with me that Eurosclerosis is still out there. I'm not sure Lagarde will address that in the press conference. What's important, and Maria Tadeo in Athens, Lagarde in a speech last evening in Greece, massive victory lap for Greece and all they've done coming out of their challenges. Lagarde, Athens, the best that Europe can be. Deflation out to 12% inflation, and they are now down 2-ish on inflation in Greece. That's a victory lap for the prime minister.
Great, they can have a victory lap. You know who can't have a victory lap? Anyone over in Germany and Italy, et cetera. There are plenty of their economies that she's going to be grappling with. And how much is this a European story, Tom, and how much is this a U.S. story? And the contrast between what's going on with the European stagnation and the U.S. strength that we're expecting at 8:30 here.
But are they combined? And it's a Venn diagram, and I'm not sure on radio I'm doing the crossy over the Venn diagram. I'm not sure the linkages and all that, but I'm sorry, inflation's inflation. If you're grocery shopping in Athens, it's the same as in London or in New York, and the answer is prices are up. Okay, don't give me this 3-month annualized baloney. Over the last 3 years, prices are up big. That's a challenge of Lagarde.
Which is the reason why, Katie, a lot of people are wondering how much she can lean into any kind of pause, how much she has to really take a harsh tone saying this is unacceptable, even though Europe's in recession.
Exactly, and I mean, it's a difficult needle to thread. You think about all the different nations that she has to keep an eye on and the idiosyncrasies between them, but it's interesting that so far the playbook seems to be similar to the Fed, as in we're going to signal that we're going to keep rates on hold, but the big difference, of course, is their balance sheet and whether we're going to get any news around that.
And the other difference really is the tech story in the U.S. I think it's really telling that on this sort of confusing brew of different points, ECB, we've got U.S. GDP, we've got Amazon coming out after the bell, and of course the geopolitical overhang. The tech earnings really has been what's been driving also the U.S. strength on a whole host of levels. So, Katie, I mean, how much is that going to offset whatever the European region can do? Because the U.S. is leaning into that story and leading.
Leaning into that story and leading, of course, driving it to the downside this morning and this week when it comes to the U.S. stock market. But it's interesting, too, the messaging coming out of Europe when it comes to the idea that the bond markets in general, are going to do the work for the central bank. If I were a central banker, I would be kind of uncomfortable with that narrative because that's a very fine line into something unsustainable.
To me, and this is, again, with the markets on the move, and they're a little better over the last 20 minutes, I don't think anybody in the rearview mirror we can say has confidence forward. I don't know how Lagarde states a buoyant confidence today about this is the view forward, this is what we believe in. I feel that pulls right over to November 1st. Powell's going to be the same way. Okay, here's where he'll know GDP in, what, 26 minutes, and maybe Art knows it already, but the answer is, I don't get much conviction out of this meeting today or what we're going to see November 1st.
And to build on that, Mohamed El-Erian came out and really pushed back against the idea of following data that's backward looking at a time when you kind of need a theory to drive you forward into the future. So this uncertainty can only work for so long, and that's certainly what we have seen pretty consistently. The uncertainty in markets right now has been negativity, and we've seen that with a bit of a softness to the tape, even after yesterday's worst day for the NASDAQ going back to February. S&P futures down 0.7%. Really, I am watching the euro this morning. I think it's going to be interesting to see whether how it responds to anything that Christine Lagarde says. I mean, honestly, Tom, what happens if she comes out and she's hawkish? Does that give the euro a lift? Or does it actually beat it up because all of a sudden that makes it more difficult for the economy to get off the ground?
She's going to try to say nothing is what she's going to do. You DXY 106.80 here, launching out near 107. Yen taking the headlines, 150 level. And yen, you mentioned euro, do we go under 104 and such? But to me, going in here, and this is the great unspoken, and she can address this because with her work with the French government, I'm sorry, the banking industry at the end of the day is what I'm watching. Individual stocks, Keefe, Bruyette and Woods. I haven't looked at BNP Paribas and the others, which Lagarde has lived. But just as a general, when I see the Bloomberg screen the way it is, I'm thinking, I better watch the banks, better watch the financials.
Regionals have been telling a pretty dire story in the U.S. In Europe, it has been a little bit more intact. We have gotten earnings from a number of the big European banks, and they haven't been as positive as those in the U.S., and that's something that really has come to the fore. As we head toward that 8:15 rate decision, about 10 minutes, 9 minutes, Jeremy Stretch going to be combing through all of it, head of G10 FX strategy at CIBC. I want to start with the response of the euro. If Christine Lagarde comes out with a hawkish tone, does the euro gain or does the euro lose versus the dollar?
Well, I think first and foremost, I think Tom's point about Lagarde trying to say nothing at all is probably about right. But if she were to be relatively hawkish, so if she starts to talk about the prospect of additional tightening, or perhaps also addresses the question about a faster adjustment to the balance sheet, then yes, we may well get an initial knee-jerk reaction higher in terms of the euro. But going back to your point about Eurozone sclerosis, then I think that would merely provide better opportunities or better levels to sell into, because in the context of the next half an hour or so, not only are we seeing the ECB, but of course we're seeing that US GDP print. And I think the contrast between the momentum in the US relative to the Eurozone, even if we're talking about backward-looking data in most instances, still favors the dollar. So I think it is very much the case that if we do see any hawkish narrative from Lagarde, it's likely to be merely used as fodder for better levels to sell, because I think the path of least resistance is still towards a cheaper euro over the course of the next few weeks and months.
Jeremy Stretch, Sonali Basak will have a conversation with Mr. Pick of Morgan Stanley, their newly minted leader here today. Let's get out front of Gorman and Pick. And I just want you to take all your years of experience and fold in the ability to have instability given what you see in the currency pairs. Do they signal instability to come for financial institutions?
Well, I think I was listening to your discussion about the banking sector in Europe, and clearly if we are going to have a protracted period of underperformance in the Eurozone, then that is going to prove to be a challenge for the banking sector, and particularly those banks that are very heavily leveraged into the Eurozone and will be impacted by that relative underperformance. So I think we are still in an environment where the dollar is proving to be the safest haven, and so that continues to perform strongly. And there is still obviously a divergence between what's happening in the Fed and elsewhere in the other central banks. So I think we are going to see further instability playing out over the course of the next few weeks, well into 2024. And of course, you also have to think about not only the macroeconomic variables, which remain challenging, but there is that overarching issue of the geopolitics and the influence that that has in terms of factors such as the energy markets, which just underline the uncertainties ahead, which do make investing in some of those financials certainly something of a challenge.
I'm going to stay on euro here now at 8:08, folks, with claims here in 21 minutes in America, and of course Lagarde here in 7 minutes. What is your call on euro? I mean, you mentioned eurosclerosis earlier, all the different challenges, but on a flow or on a rate policy, a rate story, do you model out, can I get shocking here and say you model out weaker euro to 105 to parity?
Well, I wrote a piece a couple of weeks ago suggesting, are we ready for a parity run? And I did suggest that we're not ready for parity yet, but I think we were and are likely to see a retreat back towards 102. Now, of course, if we get to 102, the potential for a blowout towards parity is clearly amplified. So I think we are in a scenario where the rate trajectories are still very much in favor of the US over the Eurozone. The growth trajectories follow that as well. And I think from a positioning standpoint, we are still in a scenario where there are still stale longs in the euro, which are and do need to be continue to be washed out. So I think as we see that position unwind, then that does provide scope for additional euro weakening over the period.
The ECB's in Athens today. That was literally Greek, what you heard from Jeremy Stretch. Katie, let me translate here. 105, 104, 103 is weaker euro. Parity is 1.00, where euro is the same value, if that's not even the right word, as the dollar. And then get to 0.99 would be ever weaker euro. I try to do that in English because my Greek is... Could you see me in classics?
I could.
Oh, no, you couldn't. Classics for me was Toronto or Montreal. Which is better? Continue.
In any case, I actually started on the FX desk here at Bloomberg, so I love this conversation. And Jeremy, one of my favorite things about FX is that it's a zero-sum game. It's pretty cut and dry. And actually, Tom brought up euro-yen about an hour ago, and it's just been trading sideways, really, for the last few months. So when we talk about a weaker euro, when we talk about parity, how much of this is just a U.S. dollar story and that dominant U.S. dollar?
Well, it is very much the dominant US dollar because, of course, if you look at the dollar against sterling, you look against the Australian or New Zealand dollars, clearly the dollar is gaining and remains relatively resilient purely because of that macro backdrop, which is very different and much more supportive than elsewhere. But there are specific euro factors which are still remaining on the front foot. So we continue to see weakness in terms of those flash PMIs earlier in the period. So we've continued to see German manufacturing nearer a depression scenario than even a recession. So there are plenty of domestic headwinds which are dragging on the euro's valuation. But of course, at the same time, when you're looking at the yen, you are also seeing that differential in terms of the monetary policy standpoint playing out very significantly as far as the continued gains in dollar yen, which of course really raised the specter of potential MOF action as far as dollar yen is concerned once again.
And Jeremy, extend that conversation to what we're going to hear in just about 3 minutes from the European Central Bank. When you think about those domestic headwinds and the desire for the ECB to stay on hold, to keep rates high, how long can they possibly stay on hold before they eventually do have to cut?
Well, I think the language in the statement will probably once again reference being sufficiently long in duration, and I think that duration probably takes us into the middle of next year. I think the ECB staff forecast in December will be hugely instrumental in terms of the policy narrative, but I think the ECB will be holding at this 4% threshold probably until the June meeting. The meetings when we have updated staff forecasts at the end of each quarter or at the start of each quarter are particularly instrumental. So I think probably at June next year will be the key meeting if we are going to see inflation coming down, providing a slightly more constructive backdrop for the ECB in terms of its policy narrative.
Jeremy Stretcher, this was CIBC, head of all of their foreign exchange effort here, commercial free through the ECB decision. We'll see that here in 2 minutes as well. Maria Tadeo is not in Frankfurt, in Athens today. I do like this idea that they travel around. Can you see, the FOMC and Mr. Powell in Dallas or with Mary Daly
I would
out
love
in San
that.
Francisco?
That would be really cool. Going to different diners and kind of go talking with
but
people.
With all the uncertainty in the world, isn't it nice to know they're always going to be
I took an emergency meeting. I had a phone call on a Saturday morning. Can you go to the consulate, rather? And I said, of course. And I threw on a tie and a bow tie and the whole thing. I show up at the Greek consulate, and it's Greek in crisis. And the prime minister was there at the time, and Greece was falling apart with 12% inflation. Spreads were out, blown out. Lisa, you know better than me. And it was a very emotional discussion worldwide on a Saturday. It's a beautiful autumnal day, as I can remember. And would I have known then the victory lap for Greece that Lagarde confronts this morning? I don't think so.
And that's maybe the symbolism of being in Athens. I'm sure Maria Tadeo will continue her European tour while she will stand behind beautiful backdrops with her hair in the wind and discuss the latest. I will say Athens is going to be a fascinating place just because also
Hi guys, again, I want to remind you, if the price will go below 120.83, as soon as it will reach 120.80, I will place order stop loss at 120.82 or even 83. It will give us 2 pips, so basically we will be in profit if after news something going to happen. Okay. Otherwise, if it will go higher, I will look for another good chance opportunity to sell short British pound. Okay, guys, stay safe. I'll speak to you later.
To get from 105 down to 102. An exceptionally important day for the ECB. And here at 8:15 Wall Street time, a set of headlines will come out on the ECB. They leave their rates where they are. I mean, Farrell would be like apoplectic right now. I can't do the John Farrell imitation, folks. I'm not even going to try to do it. It's the first place I saw John was on the lawn in Frankfurt, but there's the headlines.
Yeah, we do have the news that ECB is leaving their deposit facility rate at 4%. This was the expectation. The estimate was 4%. The main financing rate at 4.5% as expected. The ECB saying that inflation is set to be too high for too long. And again, this is very Powell-esque that the rate level must be sustained for a sufficiently long time. Inflation is still expected to stay too high, Tom, for too long.
And what's interesting there is in one of the headlines flying by, 30 or so headlines, what Bloomberg does best, is the reaffirmation of getting to 2%. Now, I don't know if I would say for the euro, that's more like 2.0, 2.1%. For 2% for the U.S. is maybe 2.6 or whatever, but there's that reaffirmation that I heard from Lagarde at the IMF meeting.
They don't want to make the same mistake that they made last time, and that's what we heard from Jeremy Stretch, and that's what we heard from others as well.
There is a headline here. I'm going to do one more here before we go to Tadeo, who knows a little more than I do on this. ECB price outlook, underlying dynamics, transmission are key, which is Jean-Claude Trichet at 101. In Athens, at the special meeting of the ECB before the Lagarde press conference, are Maria Tadeo. Maria, how difficult is it to transmit monetary policy across the fractured nations of Europe?
Well, Tom, it is difficult. And by the way, there is a reason as to why we're here in Athens. As you know very well, the European Central Bank, every year they take one meeting away from Frankfurt and they rotate among the different Euro area members. Conveniently, this year was in Athens. Now, as you say, they keep rates unchanged, but I would also even go deeper into the statement to answer your question. What they also say is that the PEP reinvestment, remember, there's a lot of debate as to whether they would try to accelerate that and bring it to an end before. They say and repeat it will continue until the end of 2024. What they also say, Tom, which is interesting, is that the rate level must be maintained at this level sufficiently long time. So the way that I read this is now a central bank that's switching to the higher for longer. Remember, a lot of people out there believe once they hold, you hold, and the conversation will turn into just how long do you want to keep them where they are. But to answer your question, yes, it is difficult because we are seeing PMIs across the Euro area showing an economy that cannot take a breather. But what is unusual here is that it is the German economy in this case that is suffering the most. That is a different narrative to the one that you would expect in a country like Athens or Greece, which just got upgraded to investment grade. So to some extent, the table's turning as a result of, well, many issues, but also predominantly the war and the energy crisis.
What we're seeing in the market is not a significant reaction one way or another, a little bit of yields coming in on the Euro region bonds. You are seeing the euro just still lower on the dollar, but just fluctuating around. Maria, what is the challenge now for Christine Lagarde, now that it seems like she's following a very Powell-like speech in terms of the roadmap here? What is her challenge in communicating this to a lot of people who have a lot of questions about what sufficiently restrictive means and also what kind of fissures in the financial system could make them turn around?
Yes, And also, we should note this decision does not come in isolation. Remember, we had the PMI data, that lending survey also from the ECB, and then the geopolitics. Yesterday, to answer your question, we already had a preview from the head of the ECB. She gave an interview to a Greek TV station in which she said we're not there yet on inflation, but we are improving in our battle to tame it, but nonetheless keeping a close eye to the geopolitics. She also suggested the ramifications, and that is assuming you keep a contained conflict between Israel and Hamas, will have ramifications and an impact on the energy. So obviously they are keeping an eye on that. So today, from what we see in the statement, the message from the European Central Bank is on hold, unchanged. I'll be interested to see what is the rationale behind it. That PEB reinvestment doesn't really change, and then she sticks with this message. Inflation is still way too high. So again, switching from higher for longer. From what I see, this is still an ECB, frankly, that is pretty dovish.
And Maria, we were just talking to Jeremy Stretch, and he made the point that he's looking at June of next year as the key meeting. And when you look at the next 7-8 months for the ECB and the Eurozone economy, the Eurozone inflation picture, what does the trajectory look like there?
Look, it's a good point that you mentioned also Italian BTPs, because again, some of the, well, the argument to perhaps accelerate the ending of the PEP program reinvestment would precipitate, or some believed could trigger jitters in the bond market. So again, obviously they have to once again balance out the many implications. To me, it'll be interesting how she pushes back or not on this idea of cuts, because remember, up until now, she's not been willing to put a number on the peak rates, but they definitely did not want to precipitate the debate around cuts. She doesn't want to go there. She doesn't want to, again, accelerate the market to go into that conversation now.
Maria, thank you so much from Athens. It's a wonderful thing. I wish the Federal Reserve System would do this as well. Just brilliant. One meeting a year away from Washington would be good for everyone involved. Maria Tadeo in Athens. We continue with Jeremy Stretch of CIBC as he considers these headlines. Not much movement in the market. I've got Euro 105.40. Jeremy, a key question to me is simple, and that is the idea of what 2% means. These are different economies, different nations. Do you look at it as 2.0%? Is the ECB Bundesbank hope 2.2%, while the Fed's 2% is 2.8%?
Well, of course, the Eurozone is a difficult beast to manage, and I think President Lagarde is very mindful of that, because as we've touched upon, there is a very different degree of performance and activity in a number of the different economies across the zone. Now, the Eurozone and the ECB is aiming to get back inflation to that 2% target threshold over the medium term. I think it was notable that obviously inflation in September did fall a little faster than the ECB had been expecting. And as I say, I think the next meeting in December will prove to be particularly instructive as we get forecast out to 2026 for the first time, but also looking at those longer run inflation expectations. And if those are back towards the 2% threshold in aggregate across the whole of the zone. And that, of course, is the difficulty. We will still get divergence in the individual nations, but as an aggregate measure, the ECB is going to be aiming to get back to that 2% target threshold over the course of the next 2 years.
Jeremy, I'm going to go to a wonderful moment I had with the August engineer from Lyon, Jean-Claude Trichet, and he talked to me about transmission, the diffusement of an economy across borders. Europe doesn't have the transmission mechanisms of America, do they?
Well, there is obviously one of the inadequacies of the Eurozone project is the the difficulties on the fiscal side on a relative basis that the US obviously has, because the US has the federal system, and we do get that disbursement of federal funds across the fiscal dynamics. So we are in a situation where the plumbing, if you like, in terms of the Eurozone economy, in terms of monetary and fiscal policy, is very diverse, because of course fiscal dynamics are still much more at the behest of national governments. But I think the other interesting dynamic to consider as we move into 2024 is that the Eurozone is thinking about bringing back those fiscal thresholds that were put on or suspended during the COVID period. And that will be an interesting dynamic to add to the wrinkle about fragmentation risk. And that, of course, is one of the big concerns that the ECB has to be mindful of, even if President Lagarde will try and downplay any concerns at this particular point.
Jeremy Stretch, thank you so much. Your support to stay with us after this ECB announcement he will prepare with CIBC for the Lagarde press conference. I look, Lisa, at where we are, and we're going to go to Mike McKee here on data. And You know, I'm sorry, I'm going to switch now to the American economy because I don't think enough has been said about how wrong Tom Keene was. Claims in 6 minutes. It's not the jobs report. I was lectured on this earlier. But this is maybe the most botched GDP call I've ever done. McKee will set us straight.
The GDP call in terms of outperforming, and no one expected a reacceleration. And this does have to do with the labor market, the fact that you have seen strength and unemployment claims come in below 200,000 for several weeks, and now all of a sudden we're just expecting 200,000, again, 207,000. All of this goes to a question. Is this consistent with getting inflation back down to 2% in the U.S.? We just heard the same kind of tone, higher for longer, from Christine Lagarde. Is it going to work in the U.S. at the level that we currently have?
Well, if you think about what we're expecting out of GDP in, 6 minutes, a lot of that rebound that we're seeing, that resurgence, is expected to be driven by the U.S. consumer. U.S. consumers are still spending it out there. You marry that together with what the labor picture looks like. People still have jobs. The labor market is still growing, and people are spending.
And this is different than the U.S. than Europe. Did you see Mercedes?
Yeah.
Did you see those earnings that were interesting? They basically said people are pushing back. Even the luxury buyers are feeling inflation where it is right now, and it is crippling sales.
It's where it is. And again, I'm going to go to Torsten Slack with his message here this morning. I'm sorry, this supercore, which I don't understand, only McKee understands it. He's got the incense burning at his desk, and he's figured, it's like Game of Thrones. You know, it is written, supercore inflation is 4%. You know, that's all there is to it.
How much of a comfort is that, though? Because you made the point, when you're at the grocery store, you see prices going up. That is felt inflation. I don't know if that's captured in supercore.
I think it's two parts. I'm in the camp, it's two parts America. I'm in the John Edwards camp, it's two Americas. There's a narrow slice of America prospering, and everybody else is absolutely hammered. We are going to go to key economic data here, always with the leadership of Michael McKee, and then Lindsay Piegza will join us, chief economist, Stifel. An eventful Thursday, Bloomberg surveillance.
The EU is one of the largest and wealthiest consumer markets in the world, and there are very few global companies that can afford not to trade in the EU. So as the price for accessing the European market, these companies need to obey European regulations. That's not surprising. But often these companies choose that they will extend the European standards across their global conduct and their global production because they want to avoid the cost of complying with multiple different regulatory regimes. So there are benefits to standardization, benefits to uniform production. So all the EU needs to do is to regulate the single market. And it's then the market forces and the business incentives of global companies that transform that EU rule.
A lot's happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From businesses most influential and instrumental.
America's economy needs a diversity of institutions. That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
Bloomberg surveillance from New York on an important Thursday. A number of narratives out there, including futures at -28. The VIX on a stick of tension. Foreign exchange speaks volumes in the bond market is what it is and what it's doing to our financial system. 30-year bank rate mortgage out to 8.09%. It is time for American economic data. 15 minutes before a Lagarde presser, numbers coming up quickly, and Michael McKee has the envelope. Michael, what do you see?
Well, the winner is GDP. The U.S. posting a 4.9% growth rate in the third quarter. That is a little bit lower than the Atlanta Fed, but certainly higher than the consensus of Bloomberg Economist survey, which was 4.5%. Katie Greifeld has been out spending money. Consumer spending goes up 4% during the quarter after an 0.8 rise the prior quarter. We'll get the latest updated numbers in just a second, but there's a lot of data to run through here. So jobless claims, 210,000. That's up from revised 200,000. That 198 went away, but we're still very, very low there. Continuing claims.
Hey guys, hello again. As you can see, we closed position at 120.82. Like I said, when it will reach lower level, we'll place stop loss. So we made 3 pips on this. It equals 300 pounds. 1 pip equal 100 pounds. This is how we trade. All of you guys who managed to enter this trade and close position, well done. Let's see what's going to happen next, and let's see what other chances, opportunities will bring us today, trading day. Okay, guys, stay safe. I'll speak to you later.
That's a little bit lower than the 1.1% we saw a month before. So I would imagine that the markets are trying to react to all of this. And Tom and Lisa will have that. And let me look into what the latest numbers for the GDP breakdown are.
There's any number of ways to look at this, folks, and the answer is really a quiescent market response. I think it's too much data too quickly, as Michael Key mentions, and of course with durable goods, which maybe is a second-tier statistic today, but it's a jump condition to a buoyant American economy. On dollar, I'm pretty much unchanged. Futures a little bit better, more constructive, -25. Standard & Poor's, VIX comes in a little bit. The Bramocam signifies a bewildered Lisa Abramowitz, I say. Yen was still 150, and in the bond market, Lisa, I don't have a clue what to say about the bond market.
I honestly can't really understand it. You see yields lower across the board on the margins, not massive moves, but this was a pretty big beat on GDP. It was expected to be a beat. Anna Wong over in Bloomberg Economics nailed it. Genius, you saw also just the GDP price index come in at 3.5% versus the 2.7% expectation. Durable goods orders, everything came in above expectations, indicating strength except for one area. A marginal increase, bigger than expected jump in initial jobless claims by not very much, 3,000, but continuing claims, they rose more substantially to 1.79 million. So are we looking at sort of trying to parse through any sense of weakness? I don't understand what else it could be.
One thing I do here, completely amateur, Lindsay Piegza would never do this, and Michael McKee would swat me with his Denver Broncos paddle. And the answer here is I got a 4.9% GDP, and I'm going to add to that the GDP price index, and I'm simplistically going to say my nominal GDP to hedge it is above 8%. No one called that, say, in March last year. Katie, before we go to Mike McKee, your observation.
I'm with Lisa. I mean, you take a look at the bond market right now. You take a look at 2-year yields. They hit a session high and then immediately dropped. We're moving lower on the yields front. If you're looking for stability, maybe you're going to find it in futures. But maybe it is what we're seeing in initial jobless claims, the fact that maybe we're starting to see some weakness around the edges. Of course, when you have 2 huge reports come out at the same time, one has to win out, and maybe that's the winner.
Yeah, I'm gonna look at this, and we welcome all of you on radio and television to a little bit of a spike in terms of improving Standard & Poor's 500. Negative 30 at one point on the Standard & Poor's futures, now negative 17. I'm watching the VIX carefully. It gives away. Doesn't have the fear, rather, of one big figure point. We've come in, so it's a more quiescent market, Lisa Abramowitz.
A viewer wrote in, thank you very much, I appreciate it, that core PCE was 2.4% down from 3.7% quarter over quarter. So another reason maybe for a feeling that we're seeing that disinflation continue.
Michael McKee looking at 47 pages of data. Michael, what does page 42 say?
Page 42 says that businesses didn't spend as much money as perhaps we thought they might. That seems to be one of the most interesting sub-data points here. Non-residential fixed investment down 0.1%. It was up 7.4% in the second quarter. And so that is a major drop-off, and I don't know the explanation for that other than equipment fell 3.8%. We did see structures continue to rise 1.6%. A lot of talk about all the buildings going up for the factories that are reshoring and things like that. Goods purchases were up 4.8%, going back to that 4% gain in personal consumption, and services up 3.6%. So pretty evenly divided, but the story that people were switching from goods to services, not quite there. The change in inventories, 80 billion, 0.6. Up from 14.9, so a major change there that also adds to growth. I'm not as sold on the PCE numbers, Tom, because they are quarterly average. Tomorrow we will get the latest PCE inflation numbers, and the Fed is going to pay much more attention to that. But it is good news to see it start to drop.
Well, Mike Bramo wants to jump in here. I got one key question here. How much does that 4.9% statistic vary with the second look and the third look of GDP?
Well, it will vary more at the second look because we'll get more precise data. And as we just noted, we got some trade data that would take away a little bit, but we'll get some more updated consumer spending numbers. By the third revision, you don't get a whole lot of change. So I'll look for the next one. But at 4.9%, it isn't going to change significantly. Larry Meyer, the old Fed governor, said that his rule was that if there is a surprise, the revision goes in the direction of the surprise, not the other way.
One thing that is sort of being overshadowed in all of these results is that that the ongoing, continuing claims, jobless claims, rose somewhat substantially. How much do you pay attention to that as a metric of weakening around the margins in the labor market?
Well, it's because it's claims, it's a little hard to know exactly what it means for the labor market, because it does mean that those who did not get jobs have taken a little bit longer to be reemployed. But you got to combine that with the length of time on unemployment that will come in the jobs report next week to see if there is a real slowdown. But it is, as you point out, Lisa, an interesting, perhaps canary if that trend continues.
Market's starting to move on this. Michael McKee, thank you so much for complete coverage here as we go to Lagarde here in about 12 minutes to review. Futures improved, negative 30, negative 25, now negative 18 on the Standard & Poor's futures, down 0.4%. The VIX comes in with a vengeance. We are almost near 22 now at 21.06. In the yield space, Lisa, help me here. I still got some curve disinversion, but the real yield comes in. What do you see in full faith and credit?
I mean, well, we'll find out during the day. It's not sort of priced in the same kind of real time when it comes to a corporate credit. In real full faith and credit, To me, the fact that you're not seeing a pop in yields on
Right.
the fastest pace of quarterly growth in the U.S. going back 2 years, to me,
Right.
is somewhat surprising.
October 30, Apple to announce new MacBook Pros, I should say. Lindsay Pieggs is pleased with that because as she ran her Excel spreadsheet on the American economy, it burned up her MacBook a couple days ago. Dr. Pieggs, that joins us now from Stifel as well. How hard is it to put together an Excel spreadsheet with the mysteries of this American economy?
Well, it's typically difficult, but it's become increasingly difficult with all of these ancillary factors that are coming in that are virtually impossible to model. We do have a lot of international factors that are impacting the market's expectations. We do have now unprecedented fiscal variables that we're trying to account for. But I think right now the market is very much discounting that third quarter number, focusing instead on the latest central bank decisions, the BOC, the ECB, as a proxy for what to expect from the Fed next week, suggesting that developed central banks around the world, despite still elevated inflation, are starting to pull back in anticipation of a slower level of longer-term growth. So the market very much anticipating the Fed may be moving to the sideline for certainly a prolonged period of time, but maybe indefinitely at this point.
So, Lindsay, just to crystallize what you're saying, are you saying that the Fed can kind of look through what we're getting out of this blowout GDP print, or at least that's the market's expectation?
No, that's the market's expectation. But remember, the market has been preemptively calling an end to Fed rate hikes for the past 2 years and wrongly pricing in rate cuts. The Fed, however, has been very clear, beating that drum of higher for longer, very consistent in their message. And I think when we look at some of the underlying data in the Q3 report, the resilience of businesses, the resilience of the consumer. And yes, to Lisa's point, we have seen a little bit of an uptick in claims, particularly continuing claims. But broadly speaking, the labor market is still extremely tight. So the Fed is looking at all of these data juxtaposed with inflation that's still too high. I think the committee is going to have a very difficult time selling a prolonged period of a pause. I think there is still more work to be done before they reach a sufficiently restrictive level to ensure that we remain on a disinflationary trend back to 2%.
Well, Lindsay, you're getting at what I've been wondering about. Of course, this is a very binary question, and we live in a shades of gray world. But when you think about the just raft of numbers that we got this morning, you take a look at the blowout GDP print, but then you look at initial jobless claims a little bit higher. What's the stronger signal there? Which one should we be focusing on?
Oh, the consumer, certainly. And I understand that this is backward looking, but remember, claims are extremely volatile, and we don't want to look at one data point, but rather the underlying trend in claims, which is still extremely low, still signaling that tight labor market or tight labor market conditions, which is going to continue to perpetuate the ability for upward pressure on wages, extending that to further purchasing power for the consumer in the marketplace, suggesting, again, the backbone of the economy, the underlying support of the economy, i.e. the consumer, remains resilient.
There's been a real angst underpinning some of the recent sell-off in the bond market at the longer end that hasn't been tied to the Fed at all. It's been tied to a widening deficit and likely increasing spending. How much is the Fed going to find itself increasingly at odds with fiscal spending? Because you talk about the need potentially for the Fed to do more. How much is the strength that we're seeing in the GDP preprint tied directly to that government spending?
Oh, absolutely. This is one of the problems. When monetary policy and fiscal policy are moving in opposite directions, that's going to force the Fed's hand to take an even firmer position to counteract that expansion of government outlays. Now, we do know that federal stimulus has largely concluded, but there's other fiscal stimulus that's coming down the pipeline as a result of legislation that was passed over the last 12 to 18 months, be that infrastructure spending, the IRA, the CHIPS Act, and other spatterings of state and local stimulus that is still being spent on constituents. So there is still a lot of purchasing power, a lot of borrowing and investment power out in the marketplace that the Fed is desperately trying to drain out of the system. But again, the more that we see monetary and fiscal policy moving in opposite directions, the more that becomes a barrier for the Fed to achieve its goal of price stability.
Lindsay, a lot of people are writing in. They're saying that I didn't really have a right to be confused because it's core PCE. And when you look at the actual inflation, yes, you're seeing growth, but it is disinflationary. You are seeing a reduced pace of growth when you strip out energy and food. How much credence do you give the idea that we got in this GDP print a core PCE read of 2.4%? Is that the sort of number to hinge off?
It's certainly encouraging. But again, when we look at some of the other data metrics, when we look at headline PCE, when we look at the headline CPI, we're not seeing this clear downward trend of disinflation. Now, of course, monetary policy is not based on headline price pressures. We strip out